Hey guys, I just wanted to jump in for a second and let you know a little bit about today's live stream sponsor, DNA Funded. DNA Funded has very generous profit sharing up to 90% and 3 different unique challenge types. For those looking to get funded, they also have speedy payouts, unlimited trading days on the first and second phase of their challenges, a very wide list of different things you can trade with over 800 different assets tradable, and maybe the most important component, a very experienced team behind the whole operation. So if you're interested in learning more about DNA Funded, click the link, check it out, see if it's right for you, and make sure to do your own due diligence to see if what they have to offer fits your trading style. For 20% off, you can use code A1T20. Again, that will be 20% off any of their challenges you'd like to check out. Thank you again to DNA Funded for sponsoring today's live stream. Now back to the show. Hello, everybody. Welcome, everybody. Thank you for being here. Sorry I'm late. Yada, yada, yada. I'm late all the time. I get it. Sorry. No, I actually am sorry. What happens is I get into the office and then I film something for the day and then I lose track of the time. And then I'm like, oh gosh. And then usually it's Chandler sending me a message. Hey, are we doing a stream today? And I'm like, gosh, that's my fault. Sorry about that. Look, we do a lot of content around here. So I get, cut me a break here and there. Okay. I get one free pass a week. That's the rule. Okay. One free pass to be 5 minutes late. I need to like connect a shocker to myself so it shocks me when it's time to stream. Maybe I should just start sleeping in the office, then I won't miss anything. Kidding. Good morning, good afternoon, wherever you are in the world. We got stocks down again today. S&P 500 down over 1%. I woke up this morning. It's weird when you start getting used to that. I was having a conversation with my dad. He also, trades, invests and stuff, and we talk markets pretty frequently. And I was pointing out to him, I was like, well, he knows this too, but for the longest time, if you're somebody who watches stocks, it's like, it's been surprising if you look at the market and the market is red at all. Like if you're red at all, it's like, wow, that's crazy. Now it's surprising if the market's green. We've completely flipped into an environment where selling is the new norm, at least right now. We'll see. Hey, Vanessa, it's good to see you. Hope you're doing well. Vanessa came to one of our in-person events a couple years back. It was really nice to meet her in person and several other people who came to our, we did a seminar a couple years back. It was a lot of fun. Anyways, we've got S&P 500 here down today. NASDAQ, of course, leading I guess Russell's technically the one really leading the downside. The Russell is going to be an interesting one this year, guys. The Russell's either going to have another terrible underperforming year, or it's going to have a big, huge bounce back. Now, the chances, I'll tell you this, guys, if you're watching indices, the chances that the Russell massively outperforms the S&P 500 this year is not looking good, because look, we've had, let's go right year to date. Let's go year to date. Year to date, the Russell is currently down 8%. I guess actually I take it back. I guess I was thinking about this. From this point, it's down 16, 17%. So the Russell's had a bad run. It's possible that it outperforms in the second half, but I feel like, this is my best guess, the Russell's either going to have a big, huge bounce back this year, or it's just going to continue to stink. And you might say, well, Nick, you just said it could go both ways. Yes, that's what I'm saying, but I don't see it doing this. Like, I don't see the Russell not going anywhere from here. I see the Russell either completely like flushing lower or making a big move. I guess if I was really feeling that way, what I could do is I could buy a strangle option set, which would be buying calls here, buying puts here, and making a bet that it either moves greatly in one direction or the other. One thing, more traders should explore options carefully. You can lose a lot of money in options, but options allow you to make bets like that, where you can say, well, I think the Russell's going to either be really far up or really far down, and you would lose money if it doesn't go anywhere, right? So options, you can do a whole lot of things. It's kind of in the name if you think about it. Options, you can basically create your own bets. If you're familiar with like sports betting, how you can do parlays and you can do all sorts of things like that. Options allow you to do those bets. And my favorite part about options is you can actually sell the bets. You can play the casino. You can sell bets to other traders, which is what I have actually been actively doing in this market downturn. I sold puts on Tesla. I would actually love Tesla to continue going down. I sold puts at 260. I have not sold puts on Uber, but would like to. I've sold puts on Google. I've sold puts on Nvidia. So I'm selling bearish bets to traders out there. So I am overall thematically long-term bullish on this market. And as it comes down, all I'm doing is rubbing my hands together because I think that we might finally be able to get some bigger, longer-term accumulation on stocks that I like. And that to me is a great spot to be in. And it's going to be a lot of fun. So do you do in-person events? Not frequently. Not frequently. Let's take a look at gold here. Gold is pulling back, or has pulled back to this key support and continues to hold. I'm long gold with a stop below this previous swing low. If gold flushes through those lows, I'm going to take a loss on it and would be happy to potentially try again around 27.80 as long as I still have the right setup on the EdgeFinder. So I do like quite a bit the gold momentum here that we're seeing recently. Gold has been pushing up. I love that this chart seems to overall be working where many charts are not. When I say working, what do I mean? Well, this chart has momentum, and momentum is something I love to trade. I love to be trading with momentum. If you're looking at the NASDAQ, momentum favors the bears right now. And, you know, when momentum was to the upside, I love trading the NASDAQ. I love trading the NASDAQ when it's trending up. But as soon as it cracks that momentum and we fail out of key support levels, like we keep seeing, look, this is picture perfect price action for the bears this week. You could not ask for better price action right now for the bears. Let me show you what I mean. Huge down moves, sharp bounces off of key levels, which give sellers the chance to reload, that sells again. We retest those same key zones and sellers flush it again. Bounce back. Are we going to see another flush lower? Right? Price action in the short run looks very bearish on the S&P and the NASDAQ. Longer term, like I said, I would love it to keep going down because I'll continue to buy shares and stuff I like. But short term, sellers are in control of this market. And we'll see if they can, take that next leg lower. Again, like I said, I've been buying some of the dip on stocks that I like. If it keeps dipping, great. That gives me a better opportunity to buy shares that I like at discounts. This is more of a long-term perspective. This is not like a day trade concept. Where I am trading more actively is gold. I'm also long TLT. I have trades on over there. I'm also short Swiss yen, which Swiss yen is going quite well. Swiss yen down here. Can we get, for the yen crosses out there, a push lower? And for pretty much everyone, this is worth watching. The state of the Japanese yen is another thing. Look, everybody is focused on, oh, let me also react to the news. I apologize. Let's see. Switch over to our all markets. Unemployment claims came out this morning. Let's see if they do anything to markets. So far, nothing too big. Okay, 221,000 jobs came in a little better than expected. 221 compared to 234K expected. Market largely unchanged. Little bit of a bounce off of indices. I wouldn't be surprised if we see more of a bounce off of that number. I mean, having a little good news goes a long way in a market that is terrified, right? What about the euro? Yeah, we have ECB stuff today, right? Yeah. So yes. So the European Central Bank did in fact go through with the cuts that were largely expected. And we have the ECB press conference starting in 15 minutes. Let's take a look. Dollar index sharply lower and then bounced back here on the unemployment claims. Let's take a look back at our individual views so we can take a look at the euro here this morning, see how that is behaving. Let's see. So the European Central Bank cut rates this morning. Euro has been on a steamroller to the upside, by the way. really strong rally here for the euro. And you know what? The euro, for a while, I've been pretty cautious on the euro. But look, what was my pledge this year? My pledge to myself is to say stay systematic this year. So can I just be real with you guys here? I talked a little bit about this yesterday on my stream, but I was discussing this with Forex James. He was on the stream yesterday, and I made this point. The EdgeFinder is a system. It is an algorithm. It looks at data objectively. It doesn't have emotions. The EdgeFinder is a system. And I've been saying on my channel, this year, 2025, my goal is to be more systematic than ever. And what I mean by that is the EdgeFinder is my compass, okay? The EdgeFinder spotted the pound bullishness and the euro bullishness, and my brain is like, oh no, euro and pound, those have been in such downtrends, there's no reason. This is why I say systematic trading is what I want to do, because my brain sometimes get in the way. And I imagine many of you guys experience this. Look, I've been trading for a long time. I've placed tens of thousands, but thousands of trades easily in the markets. And my gut feeling is not what has made me, a profitable trader overall, right? It's systematic trading. It's so important. It is so critical that you're not making decisions with your brain or your heart or whatever. Take your pick. A system is for the best when it comes to trading. Like something that just gives me a binary yes or no in terms of how's the fundamental look? How does the economic data fall? And look, the EdgeFinder has been so spot on about gold, about the dollar, about the pound. It's been bullish on the pound for a couple of weeks, and the euro. Now the euro is getting a bullishness. Look, I am going to be systematic this year. What that means is I'm not going to sit here and in my brain be like, oh, well, I don't really love the idea. Like the UK's got problems. Yes, it has problems, but systematic trading means we look at the surprise index here on the EdgeFinder and we say, look, is the UK's economy in the world's greatest state? No, but it's beating on a lot of forecasts. For example, the UK, do I think that the UK is going to be this new superpower? Well, I mean, not new, it's been a superpower for a long time. In fact, many would say it's a retracing superpower or a declining superpower. But that little thing that I just did right there, that's thinking with your brain and your heart and trying to be super speculative. When I say trading systematically, I say, look, okay, the actual data is falling better than forecast. And we see that in the surprise index, which is mostly blue for the UK. The surprise index is a core component to how the EdgeFinder scores stuff. So right now, I don't know how it's going to look in 6 months. Look, I'm not a fortune teller and I'm not a speculator. That's not how I make my money in the markets, right? I don't speculate on what the UK is going to look like next year. I don't speculate on if, Trump and Elon Musk's activities are going to massively improve our scenario. I have an opinion, but it doesn't really matter from a trading perspective. From a trading perspective, systematic trading means I look at the data in front of me and how it's falling, and I trade that environment until it changes. Does that make sense? If that makes sense, if what I just explained makes sense, type yes in the chat for me, right? Because again, is the UK economy great? No, it's not. They have high inflation, sticky inflation, slow growth, right? Not the greatest in manufacturing PMIs, decent services PMIs. Retail sales are a little bit upbeat. Is it great? No, but it's behaving slightly better than forecasted. That's all that matters from a trading perspective. That is what we have isolated. That is what the EdgeFinder specializes in, spotting divergence between expectations and actualizations in data. That's why the EdgeFinder is my system. That is why I stay systematic, because it spots that stuff better than I do. I can sit there and like think through that piece by piece. Yeah, sure. But the EdgeFinder was weeks ahead of me in spotting, hey, the pound might be bullish. Hey, the pine. So when I say systematic, I mean systematic. The EdgeFinder spots stuff quicker than I do. And in some ways, that's a little scary because systems becoming smarter than you is something that I think we're all getting used to with AI and all that. Uh, but to see my own system finding ideas better than I can find them is both very exciting and also terrifying. But this year, I'm going to lean in to the systematic approaches that I have. It doesn't mean I'm just going to go blind buy the pound dollar. I'm still going to, analyze the chart, find setups, manage risk, enter and exit appropriately. All of that is still applicable. But when the EdgeFinder gives me a bullish reading, I need to take it more seriously, or the bearish reading. Like I do that already, but I need to lean further in. That's what I'm trying to express with my trading in 2025. I want to get more systematic, not less, right? So right now, if I take a look at current ideas from the EdgeFinder and we go remove the neutral readings, look at this. We have S&P 500 bearish readings. That is rare. Dow Jones, Russell, Swiss yen. I did act, so I will pat myself on the back about the yen stuff. The yen screaming bearishness like a month ago was an excellent idea that the EdgeFinder spotted, and then I actually executed on that trade idea. So, I just need to not second guess kind of what the data is showing me. If the economies of the world are upbeat or downbeat or missing or beating, that's the kind of sweet sauce that I look for in terms of creating the right setup. You talk about being this you thought you really hit on this one, but that is exactly not what I'm saying. You talked about being the EdgeFinder being an algorithm, but you bash other people for saying there's an algorithm. No, there's tens of thousands of algorithms. What I do disagree with harshly is not that there are algorithms. There's millions of algorithms. Every hedge fund has many every high frequency hedge fund has many algorithms that are trading in the markets. The thing that is silly is thinking that the whole financial market is operating on one guy's algorithm that he built in his garage, yet he doesn't know how to code in TradingView's Pine script. I mean, come on. I'm a programmer. That's ridiculous. I'm not the best programmer, so maybe you should take everything I say for a grain of salt. But there are many algorithms in the market, right? Thousands, tens of thousands, millions of different algorithms trading on the markets built by PhDs, computer scientists. But the thought that it's controlled by one secret sauce algorithm created by one guy is it's actually manic. That is like ridiculous. Anyways, we're not going to stay on that. S&P 500 bouncing back a little bit. NASDAQ down 1.3 at one point here. We were at 1.5 at the worst. Gold is doing okay. Let's see. But yes, the EdgeFinder is absolutely an algorithm, but it's not the algorithm. There is no one algorithm. There's many different systems, floors of computer scientists, quants, if you want to call them that, programming, building robots in the markets, systems, dashboards, algorithms that create ideas for traders, Bloomberg terminal. There's millions of different systems out there. What I sharply refuse to believe, because it's nonsense, is that the market is controlled by one person's secret algorithm. You would have to be like, what do they call those new computers? Like the supercomputer thing that Google's talking about, like the new quant computers or whatever. You'd have to have the brain of one of those things to program the entire world's financial system. by yourself. Like, you have to also remember, like, programming just the internet, right? The internet is an incredible, innovative thing. And it's about as complex as the financial markets. There, I would put them on the same level. The markets are so all-knowing, so inclusive of so much data that's going in and out of them. To think that, one guy, it's the same thing as saying the whole financial market's programmed by one person, is the same thing as saying, it's the same level of lunacy as saying the entire internet and everything on it was built by one person. You could type at the speed of light and not do it by yourself. Anyways, I went on a rant. I'm sorry. It's just that is triggering to anybody who it's especially triggering because I my background is in programming and I'm obsessed with markets and have studied them for almost a decade. So it's like, that is just absolutely lunacy. Anyways, gold, silver. Silver actually had a really impressive, sharp move to the upside. This was a little frustrating because I took a win on silver on the way up, stopped out, took another entry, stopped out, took another entry, stopped out. So I took 2 losses and 1 win. And so my record with silver here recently, silver and I are a little upset with each other right now. But gold is treating me okay. I've got a good start, and I jumped from silver over to gold because, again, saying systematic, gold has the strongest reading on the EdgeFinder at plus 14 right now. By the way, quick little public service announcement. We are currently doing this week a significant discount on the EdgeFinder. If you don't have a copy of the EdgeFinder, we're doing 35% off, and this ends tomorrow. So if you've thought about getting a copy of the EdgeFinder for a while, if you've been watching the streams for a while, been watching my content, and you want to start taking your fundamental analysis, your sentiment analysis, and your technical analysis to the next level, check out the EdgeFinder. It is 35% off right now, and we'll be dropping a link here in the chat to where you can speak directly to our support team about getting access to that discount. Alternatively, for those who are watching who would just like to explore its features or go through our free course on the EdgeFinder, head over to a1trading.com, and under EdgeFinder, you'll see we have all sorts of stuff available for you to check out. So you can go here and go to tutorials, for example, and you can click through all of the different features, how they function, how the EdgeFinder scores, and you can check out our team's work on the software. We've been working on this thing for 3 years now. It has come a long way, and it's still got a long way to go. This tool gets better every single year. So right now, like I said, the EdgeFinder is 35% off for a very limited time. So don't miss the opportunity. Head over to a1trading.com. You can chat with us if you want more information in the bottom right hand of the screen. Click chat with us, and you can speak directly to our support team there if you have any questions about the tool. Okay, guys, up next, we're going to bring in Miko and Marco for Technical Thursday session, talking charts with both of those guys in just a moment. We'll be right back after this quick break. If you're someone in the United States looking for a Forex broker, it's been hard to find recently. There's been a lot of changes in the industry, so I wanted to take a moment to tell you guys about Oanda. Oanda is a US regulated brokerage that allows US traders to trade currency pairs like the euro dollar, the pound dollar, the dollar yen, Kiwi yen, all sorts of different currency pairs. So if you're interested in checking out Oanda, we're going to be dropping a link in the chat right now as we speak. They, again, are a huge brokerage in the United States that allows you to trade without the worry of whether or not your account is going to get shut down tomorrow from an offshore, unregulated, sketchy brokerage. They have been around for a long time, and I've used them myself for a number of years. So if you're looking to trade FX and you're in the US, this is the brokerage to check out, in my personal opinion. So take a look at it. We'll drop the link in the chat, like I mentioned, should also be in the description of this live stream. Do your due diligence and see if it's right for you. Now back to the show. All right, and we're back with the same crew every Thursday. We got Technical Thursdays with Miko, Marco. How you guys doing?
Hello.
It's nice to have you guys back again for another session, and probably going to be an interesting one. Things have been just moving like crazy. Every single week we check in, it's like the market's a completely different place. Dollar index has fallen off of a bridge, it seems like. The last 3 days, huge downside move, 3% move lower for the dollar index, and now seems to be even following through a little bit more here to the downside. So I guess we'll go right into chart of the day for each of you guys. Marco, what's on the radar right now? With such a crazy market, are you? I guess chart of the day, but also, are you finding yourself finding more setups in this kind of market, or are you more sidelined in this kind of market?
Yes, I'm definitely seeing more setups, and I have actually started trading the second strategy, which is on, let's say, the 4-hour and daily with the EdgeFinder. So my chart of the day is gonna be on the JPY pairs, and it's gonna be Swiss yen.
All right.
So yeah, I did take a short, like a flag on the 1 hour, but then I decided to place the stop loss on, let's say, the 4-hour chart. And I'll probably trail it on the 4-hour as well if it starts going into some profit. But again, on the EdgeFinder, very bearish. The trend is definitely down. So the CHF JPY is the best currency pair to go long on the yen because of the interest rates. So I don't want to pay a huge amount of swaps. So this is definitely the best option. And I'm looking to get in also on the New Zealand Japanese yen, which is also pretty bearish on the EdgeFinder. But this would be more of a 1-hour play with a smaller stop loss, let's say. So I'm definitely seeing that signature momentum, which I want to see with the push down, pullback, and a continuation. Currently, I would like to see this last candle go a bit lower. So do something like this. And then I would be looking for like a break and retest trade. So I would look for the price to retest this little low right here with, let's say, a 20, maybe like a 30 pip stop loss. That would be a good play in my opinion. So yeah, the yen pairs are my chart of the day, NJ and CHF JPY.
Yeah, no, the yen pairs moving really interestingly. And just a quick tip for everybody in the audience who also likes yen pairs, I really like looking at the Japanese yen currency index. We always talk about the DXY, but the JXY is also really cool to look at. It's kind of gappy, like it has it's not the prettiest chart per se, but I like to add just a simple kind of filter momentum on it just to look at it. And you can see breaking out here today, big jump through those highs. And this gives you an idea of, Marco, you've highlighted the Swiss yen specifically, but this is, of course, like the basket, right? Aussie yen, CAD yen, pound yen, all of those kind of mixed into one chart. So up here today for the Japanese yen, we'll see if there's any follow through there, but been trending well. A little bit of a breakout here, it seems like, this year for the Japanese yen. Marco, thank you for that. Miko, what about you? Chart of the day, what's on the watch list?
Yeah, so I'm very focused around USD, especially with the recent activity. At the moment, I'm currently short on USD CAD, hopped into this trade on Tuesday. It's been going okay. Of course, CAD's been very weak as well, so it's probably not the best pair to partner the USD with, but it's the only one that actually gave me a good opportunity to enter a trade. So I entered this one on Tuesday in a little bit of profit. I'm targeting the lows here, so I'm looking for a lot more downside, and especially with the breakout we saw of the DXY, I'm actually looking to lean towards a more long-term bearish view now for the dollar, because it looks like price has failed to break out of this range now. So with this momentum we're seeing here, with that big bearish move this week, I'm looking to see if we can target.
Hey guys, sorry, I don't want to cut in like this, but I'm having trouble with the screen share for some reason. The guests' screens aren't showing up. I don't know what the problem is, but
can you, Chandler? Can you see my screen?
I can see yours when I cut back to it, but for some reason, when I go to Miko and Marco, the screens are just not appearing.
Okay, Miko, Marco, maybe could you guys just try like restarting your screen share? Maybe that will fix it. Okay. Try it at least.
Sure.
Sorry for sorry to cut you off, Miko.
No worries.
Wait, you're looking at dollar CAD. I can at least pull it up and you can keep talking about it.
So yeah, very bearish on USD, especially with the breakout this week. Let me know if you can see the stream, but yeah, dollar breaking to the downside this week. So we had that kind of price try to break out of that range. And of course, with the momentum this week, I'm expecting price to be falling to about 100 there for the dollar. So I've got a pretty bearish outlook for the next probably 2, 3, maybe a couple of months now. So at the moment, USD CAD is the only pair that gave me a good opportunity to take a trade. So I'm currently shorting that one as well. Hopefully to to the next swing low, which is at, get to the 4-hour chart, which is at 1.415. So that's kind of my target for that trade. Other dollar pairs which I like as well, Euro USD, really strong move to the upside. Again, a lot of people looking at that one. I like the pullbacks for that one for more upside as well. Pound USD looks pretty good as well. It's pretty much the same setup really with the USD pairs. We're just basically looking to follow the momentum. Just want to see some healthy corrections first to get into some pullbacks and continue that momentum.
Yeah, the dollar CAD one, especially, Miko, is really interesting on the short side because so the dollar's like really weak, but holding up decently well right now against the Canadian dollar, just because of all of the recent headline drama between Trump and Trudeau, Canada, U.S., all the tariff stuff. The idea, I guess, is that it disproportionately hurts Canada far more than it does, the U.S., the trade war stuff. And what I find interesting, though, about your idea is that if you do get any resolution, I know the other day, I think it was yesterday, Trump and Trudeau had another phone call. If there's any developments in the positive direction on that, any coming to the table, any compromise whatsoever, dollar CAD could drop like a rock, because the dollar index is already down a ton, but dollar CAD's been kind of holding itself in limbo here. If you get some positive news on that, dollar CAD can completely roll over in that sort of circumstance. But yeah, no, dollar CAD, interesting chart for sure today, and definitely center stage to everything going on with the trade war stuff and tariffs and things like that. Miko, I also want to ask you about the yen pairs while you have it. But before you do, the other question I wanted to ask you, are you finding more trading setups in this kind of high volatility environment? We can express that anytime we want to know how much volatility. You can always take a look at the VIX. The VIX is up to, mid 20s, 23, 24. That's a good up move in terms of expected volatility in markets. Are you finding more trades in this kind of environment or less trades?
Definitely more trades, more trades, because a lot of my trading is based around following momentum. So if the market is very kind of flat and range bound, then I don't really get too many opportunities. But if we're seeing a lot of breakouts, a lot of momentum, then I'm basically looking to follow that. Of course, I'm kind of looking at the bigger trends of the market, so I'm not always just looking to follow momentum any which way. But if we're seeing movement, it means there most likely will be opportunity. So a lot of the USD pairs are lining up quite nicely. Yen pairs, they're getting there. Some yen pairs look a little bit better than others. I like dollar yen to the downside. This one looks like it's about to break through a really big level of support in the daily chart. And if that remains true, then I'm looking for the next level down here at 140. So that becomes very interesting to me, looking to find pullbacks on the way down to that level. So that will be a pair which I do like. Some other yen pairs have been a little bit difficult to trade. Pound yen's been a little bit flat, just kind of sideways, although we have seen momentum back and forth. But in this case, it's kind of just going nowhere fast, really. So in this case, I don't really have something to look for. But should pound yen go and break through some support, like what dollar yen's doing, then hopefully there'll be some pullbacks and opportunities to trade there. So out of the yen pairs, I think dollar yen looks the best to me. Of course, not the USD pair, but I like this one to the downside, and I'm keeping a close eye.
Yeah, dollar yen's been interesting. It's really kind of reversed course here and turned quite bearish here, taking out those lows as you mentioned. Big support around the 150 level seems to not be holding too well, and we'll see. It's quite an interesting pair right now, and I kind of agree. I think a thought process of dollar yen returning down to 140 range could be quite interesting. We'll see. It's a volatile pair. Marco, same question to you about the yen pairs. Are you you've got the Swiss yen trade? Is there any other charts that you're watching? Other than Kiwi yen, sorry. I know you already said that too.
Yeah, those are the only two charts on the yen. I mean, I'm watching EJ, I'm watching AJ, but in terms of the pure price action on this 1 hour chart, I'm already in CHF JPY, but NJ is something I'm looking to possibly get into. This last candle is now printing more bearish, so it's going a little bit lower, which is good. So I may look to get in on like a small break and retest on NJ. So I'm looking at, to be honest, every single JPY pair, but according to the EdgeFinder, I think CHF JPY is very strong, NJ is very strong with a bearish signal, EJ not that much, it's kind of neutral if I remember correctly from this morning. So yeah, those are my two main ones, NJ and CHF JPY. Yeah.
Okay, fair enough. Next segment, I suppose, is metals. Marco and Miko, I guess the last time we spoke, all of us kind of think that, metals are in an overall upward trend. But I'm curious, especially with Miko, with the silver versus gold concept that we regularly talk about on the channel. Silver or gold right now, and where would you look at possible entries?
So with silver, it's a little bit awkward, to be honest. I'm still very bullish on the pair. However, my focus has kind of been on this big level here on the daily chart. So I'm just going to see what we do in reference to that level. Does price break through, or do we start to hold? Because last week it looked like price was breaking through. Then we had a kind of a meltdown. I don't know if that was the week before, but we had a bit of a meltdown. I'm still looking to see if I can get some longs back to the high, but this has proven to be a bit of an obstacle. So if we can clear that, that'll be fantastic. And then pullbacks afterwards is something I'll be interested on. Gold as well, I've been looking for buys, but I wanted the price to come a little bit deeper before I do intervene. I like the swing high here. We had a really aggressive sell last week, so I was hoping we could come a bit further to the downside. Hasn't quite seen that. I wonder if gold's just going to fly. It's still a very bullish market, so I wouldn't be surprised, but I'm not really looking to get involved until we get to at least 27.89. Really nice prior high there, and that would be my area to buy. So I'm still bullish on both of them. In terms of entries, that's kind of the area I'm looking at, 27.89. And silver, don't really have an entry yet, but I just want price to be trading above that zone, and then I will start looking for some entries. But long term, still very much a buy.
Okay, yeah, fair enough. I feel like gold has a little bit of a just kind of a stubbornness in terms of going too far down right now because of the kind of state that we're in, where governments around the world are all kind of tense and up in arms, and there's just the concern about what's happening in the Middle East and in Ukraine, and then of course the U.S.-European relations. There's just many different kind of uncertainties, not to mention of course the Canada, Mexico, U.S. kind of trifecta concerns. There's all sorts of just drama everywhere, and that to me seems like a good reason that gold can remain supported. But I too like that idea. Like if you get a larger, I have a long position at this current area where we found support. If that breaks, if that fails out, I'd happily try again at 27.80, as long as the fundamentals for me, the description I just gave still kind of applies. If that scenario is still there, I like that idea a lot too, that 27.80 level that you discussed. Yeah, same question to Marco. Metals, gold, silver, how's the momentum looking, or is this set to continue, or do you think it's overdue for a sell-off?
Yeah, so again, I've started trading this second strategy with the EdgeFinder, and my old strategy kind of a hybrid on the higher time frames, and gold has been a very bullish signal. So I did get in on this 1 hour chart with this little break and retest right here with the stop loss placement according to the 4 hour, this sort of a swing low. And that's the general game plan. I'm gonna, if it goes into profit, I'll try to trail it on the 4 hour. And if it stops me out, it stops me out. But again, it's a fundamentally very bullish story. In terms of momentum on this 1 hour chart, if I had to make a decision, it would be a bearish one because of these large bearish legs, which I don't really like. Does that mean I'm gonna exit the position? No. So those are kind of two separate strategies. But for my first strategy, this would not be a good entry. What I'm seeing right now, I'm seeing a bit of a pause, a bit of indecision. But in terms of the second one, fundamentals looking great. Overall story on the 4 hour looking pretty good as well. And the daily looking nice with this sort of a drop, a bit of a pullback. But again, overall, a lot of momentum behind it and a general risk off sentiment, which is, of course, good for gold. So I'm bullish.
Yeah, and I find it really interesting too in terms of yields. A little bit of a divergence. I know this is kind of a sidestep story, but the announcement from Germany about the massive amounts of spending that is intended. I think it was, could be wrong. Somebody correct me if is it 800 or 600 billion euros expected to be funded towards war efforts. Germany seems to be kind of stepping up, taking the lead on the whole situation with the breakdown in U.S. Ukraine stuff. That reaction here, jumping in the euro 10 years. I mean, the euro got stronger off of this, but also this yield is confirming that, okay, that's a huge amount of spending. Who's going to pay for that? Well, the ECB might be doing some printing. That's the idea of jumping yields, higher expected inflation, et cetera. So, and also, arguably massive military spending. It's like the military industrial complex. It stimulates massively the economy, at least in the short run, because it's just money floods in every direction. So, it's an interesting time. Meanwhile, to counteract that, we see the U.S. yields coming down. This is part of the reason I think why the dollar has been cratering. Has been, U.S. Yields and inflation. Inflation's still kind of up, but expected slowdown in a lot of government spending and, maybe the economy as well. We'll see. But really, really interesting time to see everything going on. Indices also have been, this one I'm really curious to get you guys' thoughts on, because I think for the first time in quite some time, we have some momentum here to the downside. We've been in just this perpetual uptrend. And I guess I want you guys to share with your thoughts. Is this rolling over and starting a downtrend, or is this still innocent till proven guilty? Miko, what do you think? NASDAQ, S&P, any of them, take your pick. What do you think about these?
Yeah, it's an interesting one. They're coming up to some levels where if they do break, I would say it is in a bearish market, at least on the daily time frame. And I would expect to see some lower lows and lower highs form. This is the level which I'm paying a lot of attention to on S&P 500, which is just about the last low, which gave us the last high. So as long as we're consistently making high lows, I still deem the market to be bullish. If we start breaking through lows, then I am looking at that with a bearish lens. And at the moment, we haven't quite broken through that level yet. We're still hanging on for dear life. We've got a few wicks here on the two previous daily candles. So the market is still paying respect to that level. But of course, potentially maybe today we break through, or maybe today we leave another wick. So I want price to really give me a confident break. And that's when I would signal that S&P is in a bit more of a bearish climate. We could be seeing some nice shorting opportunities, particularly in the lower time frames for that one. Likewise with NAS as well, we've come into some big levels of support. It looks like price is trying to clear the level. Again, not really seeing a clear-cut break, so I do want to see a bit more momentum, and then I would be pretty bearish on NAS as well, looking for some more downside. And US 30, I don't think we're at a big level yet. Nah, we haven't quite made it to this area. If that level breaks, then I would be bearish in US 30. So we're kind of on a make or break it level. If we do see a lot of momentum below that, I would be pretty bearish.
Okay. Yeah, no, I mostly agree. I mean, you've got some key critical levels. One of the easiest ones to point out that everybody kind of seems to love on Wall Street is the 200-day moving average, which I've just pulled it up on my screen here. You can see that we have just tapped into the 200-day moving average for the S&P 500. And what's critical here, I mean, I guess it could be slightly different if you're looking at SPY, which is still a little bit lower. But the point is, to what you've just said, Miko, we're hitting some real critical levels, and how we react here could set the tone for the next couple of months. I mean, if you just have a big flush through those lows, I imagine that a lot of Wall Street algorithms are going to trigger, oh my gosh, we've broken that 200-day level of support, and can't seem to find any buyers. But really big momentum to the downside, and we'll see what happens next with it. But same question for you, Marco. Is this just kind of a dip in a bull run, or are we breaking down into more of a bearish trend?
Well, I talked about this in the last couple of streams, and I think this is not a good sign just in terms of the momentum, because we're seeing the daily chart, we're looking at the candles, and it's just being very red in the last couple of days. I do think that 200 moving average is going to create a bit of a bounce. It already has, but I do believe the sellers are winning in this market. And again, tariffs are one of the things that is scaring the markets, so producing a risk-off environment. And I don't think tariffs have yet been resolved. We don't really know if they're going to be implemented, by how much will they be implemented, will they be stopped. So until that resolves, I can see a bit more panic in the markets and a bit more of a sell-off. Just the technicals don't look the greatest. And we did have this sort of a trend line that was going up. I mean, you could draw the trend line pretty much anywhere, but I do think we have kind of broken out of this structure in a bearish manner. So I would actually be bearish on the S&P 500. Does that mean I'm gonna like forecast a huge crash like during COVID or 2008? No, not really. But I do think this is not over yet, just because of the current technicals and the general environment with the tariffs and the uncertainty and with the wars and stuff like that, basically. Yeah.
We've talked many times on the stream about yen pairs in a similar way to indices, in that they drop very, very quickly when they're dropping, and they tend to just grind higher when they're in a bullish trend. Yeah, I mean, eye-opening stuff, definitely, to see both of you guys. I mean, I value you guys' technicals quite a bit. So to hear that we're all kind of on the same camp of like, okay, look, you've got clear sellers in control, and with critical levels on the doorstep, if you start breaking those, you know, it's hard to tell where the bottom is. I want to show one thing of caution here on my screen, if it works. I know Chandler is fighting for his life with the screen sharing issue. So I'm sorry to Chandler and sorry to the audience. From our end, we can see the screens, but if you can't see our screens, just let us know. We're doing our best. So thank you, Chandler. But I wanted to show, if you can see it, the investor sentiment survey report came out. And I love this thing, man. I love sentiment. I know all three of us look at sentiment just to get an idea of what the general crowd is. Look, I would say all three of us are a little cautious to bearish. I, would definitely lean that way. But the sentiment here, what concerns me about getting outright bearish at this moment, is that you have the popular crowd getting bearish right now. And to be fair, the popular crowd has been right for some time. We've been bearish since early February, and that has gotten steepingly so. But my concern here is that we're getting very bearish. The bears are getting pretty loud now. So I think that it is worth at least considering. You may get a bounce off of these critical levels, like Miko pointed out. You take a look at the S&P 500. We're hitting some key zones. If you get bounces, maybe that's more where the bears would step back in. It just may be worth being cautious, even if you are bearish. These things, the snapback can be very violent. So selling the lows is one of the hardest things I can possibly think of in markets when it comes to indices. So the last thing, bonus chart here that I wanted to bring up with you guys from a technical perspective. We love talking about relative strength together. The three of us have done that for several weeks now, talking about silver versus gold and Pepsi versus Coke and Bitcoin versus Ethereum. I've got a new one to add to our conversation. It's the DAX versus the US markets. Look at the German stock market. This thing is powerhouse to the upside. So what do you guys think about this? Do you think that, from a technical basis, first and foremost, do you think, Miko, that maybe UK, German, Spanish, Italian stocks could outperform? Do you think the indices over in Europe look better and have potential to continue to trend the way they are? Or is this overstretched and you would stay far away? I know you don't trade them, but from just a technical analysis perspective.
Yeah, I would be... again, there's two ways to go about it. There's the idea that, okay, the market is exceptionally bullish. I'm just going to keep looking to buy all the pullbacks, and until I see the market show some signs of failure, I'm going to keep looking to buy. Or there's the take that, okay, the market is really, really stretchy, especially for the DAX. It's been a while since we kind of been at that kind of slant, which is how impulsive we are right now, the market is really high, so you're expecting a top to form. And you're probably correct to say that a top probably will form pretty soon. But of course, it could be this week, could be next week, could be next month. We don't necessarily know when. My take would be keep looking to buy, because that is what the market's currently doing. And I will be looking for pullbacks of that. I don't trade the DAX, but if I was trading the DAX, that would be my take. But the moment I do start to see some lows crack, because looking at the chart right now, we haven't really taken out any major lows, that all just staying intact. So the moment we start to break through some lows like this, that would be the time to pause, and we could probably see some pretty heavy corrections as price kind of looks to take a break for a little bit. But at the moment, I'll just keep looking to take advantage of what the market is doing. All-time highs, who's to say we can't go further?
Yeah, no, just an interesting, I think it's so far probably one of the most interesting charts of the year in 2025. You've had everybody came into this year just touting American exceptionalism over and over. US is the best on every front. You want to invest in the US dollar, US markets, everything. And just a case in point of how markets do a wonderful job at tricking everyone, right? So many people get so piled into an idea. And that's why, when we talk about sentiment on this channel, on these streams together, you have to be careful when something gets really, really exciting in markets. Just don't chase shiny objects. It usually ends poorly. Marco, same question to you. The DAX, is this a breakout year for non-US indices? I mean, from a technical basis, do they look better?
So what's the ticker that you had on?
I used German 40, GER 40.
This one?
Yep.
Okay. So I think this is very bullish. I think this looks very, very strong, very, very bullish. And it is a bit surprising to me because, because of the tariffs and everything like that. And the world is not in the best place right now, but the chart doesn't lie. And I wouldn't be a short seller here. I definitely wouldn't go short. The bullish momentum is quite evident, and the moves are looking even cleaner than on the S&P. So when the S&P trends, it kind of moves like this in sort of these ascending channels, while the DAX looks much more, let's say, powerful. I'm seeing a lot more momentum. A little bit of a slowdown on top, but again, I'm not seeing any down days with large selling pressure. This is the daily chart. So if I saw something like this, I would be concerned. I'm just seeing currently very blue candles and a lot of bullish momentum. And how would you explain this in terms of the fundamental picture? Do you have any ideas for that?
Well, I think that the concept being that, okay, if there is going to be this massive step up of German spending for the war efforts. I mean, the German economy has also, it's the kind of the powerhouse of the European Union. That and France are the big, players at the table, if you will. So they've had this big step up. I think it's also benefiting from some of the uncertainty in US markets. There's this like desire to spread out and get somewhere else. And so, even, you see Chinese stocks as well, doing quite well. There's this move away from US stocks, which are, according to historical pricing, US stocks are quite expensive. I know, of course, people are going to make it political and say, oh, people are they don't like Trump, so they're going to other places. But I do think that part of it is the uncertainty around Trump. Maybe 6 months, a year from now, the trade is right back into the US and things look a lot better. But right now, there's that uncertainty where other places have lower valuations to their stocks. They're valued much more, I would say, appropriately to their earnings than some US stocks. It's been part of the reason why I've been pretty cautious on US stocks. They've gotten very expensive relative to the earnings they produce. So, I think there's a little bit of a trade down to maybe not the world's top tier companies, but the world's still great companies valued at ranges that are a little bit more appropriate. I think that's the narrative, but we'll see. Anyways, guys, I think we're out of time. I know we usually do Bitcoin, so we'll have to save it for next week. It's been an exciting chart, but we could compare it, I think, to our analysis with indices. All of us are a little bit cautious on indices, and we usually have something similar to say on Bitcoin. But I want to thank you both for your time today. And of course, everybody in the audience, do me a big favor. go subscribe to Miko and Marco on YouTube. They both have great channels where they're putting together some excellent content for people who are looking to get more free analysis, free trading education. Again, all of it is available on their YouTube channel. So take a second, go subscribe to Miko Audu on YouTube, as well as Marco's Trading Journey on YouTube. Both are linked in the chat right now, or you could search their names up on YouTube. Give them a subscribe. Thank you guys very much for coming on today.
Thank you. See you next time. Goodbye.
See ya.
See ya. See ya. Okay, guys, quick announcement before we go to our next guest, Forex James. He's back for another session. We have got the EdgeFinder 35% off sale ending soon. I just wanted to mention for everybody who is watching right now, if you've thought about getting a copy, I want to make sure I continue to mention this while it is available so that people don't miss it. Almost every single time we do some kind of discount, people at the end of the week say, oh, I missed it. And it's like, how many times do I have to announce it? But there's your announcement there. If you've been thinking about getting a copy of the EdgeFinder, don't miss your chance. It's 35% off right now if you send us a direct message, or you can explore the tools and features available on the EdgeFinder. If you want to go through it on your own time, head over to a1trading.com. You can click view our products and go through the EdgeFinder, the stock box. I mean, look how interactive our site is. Julie does such a great job at building our website. Anyways, you can head over to the EdgeFinder. You can explore all the different features and much, much more. So take a moment. If you've thought about it, I'll just drop the link here directly to where I am looking. Take a few minutes, go through the EdgeFinder, see if it might be right for your trading. And if it helps you in any way, shape, or form, please feel free to chat with us or sign up for more information. All right, quick break. And then up next, we got Forex James taking over the show. We'll be right back. We often get asked by our US viewers, how do you guys trade gold and indices on a regulated broker? To trade gold, indices, and more, we trade using Webull. And for US citizens watching now, for a limited time, you can get free stocks if you use our promo link that can be found in the description or dropped in the live chat right now. Webull is our top pick and personal choice when selecting a broker here in the United States for stocks, indices, and commodity trading specifically. Get your free stocks now by clicking the link and signing up using the instructions found there. Now, back to the show.
Hello. How's everyone doing? Hope no one is stuck in euro dollar longs. I've seen it all over Twitter recently. People in euro dollar longs, and I actually saw someone got liquidated today as well. It was a bit unfortunate. A1 and Nick, I appreciate it. Sweet. Okay, cool. So markets are a bit crazy at the moment. Dollar continues to fall off a cliff. The yen is doing very, very well at the moment. The pound's up, the euro's up. So we've had, or well, still in essentially a complete flip. So I know previously the narrative essentially was just buy the dollar, sell dollar crosses. It was very, very simple, very straightforward. There was, you could have had 2 brain cells and just click sell and you would have made money. Now it's not quite the case because obviously the dollar is free falling. Really, I don't think there's any other way to describe it. The euro's up again, pound's up. So it's more dollar cross longs at the moment. Problem is, a lot of these markets are still very extended. So I know yesterday we were discussing the idea that the market is, a lot of the markets, especially euro pairs, are very extended. So it's not a case of I'm not bullish. It's more a case of just waiting for the markets to pull back now, because you can't buy here. Let's be realistic. I think if you're buying here, it's either a little bit of FOMO or FOMO. I don't really know why else you would buy it at the current level, unless you're, willing to hold it for quite an extended period of time. So as far as I'm concerned, I'd like to see price come back down to around 105 and retest that level, and then maybe continue to the upside. It seems like not the Fed, the ECB had a hawkish cut, so they reduced their rates by 0.25 or 25 basis points. What did they say? They were doing a less restrictive, sorry, I'm just trying to think of I can't remember the exact words, but anyway, it's less restrictive going forwards by the sounds of it, and they're taking it on a data by data perspective. So that does lead me more towards actually going long on the euro at this point, as well as Germany's increase in infrastructure budget and reduced on the debt restrictions, which is boosting the investor sentiment. So we've got that. We've got the dollar falling off a cliff. It seems pretty straightforward at the moment. The central bank divergence isn't really the same anymore, which is a little bit unfortunate. But either way, the point stands. On the euro crosses, we've got euro pound very, very extended at the moment. If I can find it, euro pounds here, pretty aggressive move to the upside. Very typically, this is the behavior we see on this pair, where we'll have an aggressive move up followed by an aggressive move down. So I think at the moment the markets are just processing, digesting, and pricing in the new data and the new landscape of the markets or the economics, and then we might see more what's the right word, I guess, more peaceful or more normal conditions, if you will. The FOMO lords buying euro as we speak. Yeah, I mean, if you've seen the retail sentiment, they're actually selling very, very heavily, and they've been essentially completely counter the move. So let's just actually compare. So retail sentiment. Actually, let's do history on euro dollar. So they went heavily short on the 4th of March. Euro dollar rocketed on the 3rd. Oh, sorry, had the first bullish candle on the 3rd and rocketed on the 4th. So they essentially were preparing to go short on this bullish candle and then got heavily short on each daily candle, which is quite amusing. I think we all know the retail lose, but they've essentially only lost money in probably the most easy market to trade for the past 6 months. So there you go. They got massacred. They absolutely did, which, what can you do? It's, this information is very public. I make videos, I do streams, Nick does videos and streams. If they're not willing to find the right information, then that's on their heads, not ours. Euro AUD, I'm actually short here. I've having laughed at the retail traders for going short. I am short, but the reason is it's not really a macro play. I'm more looking for a mean reversion play. So this is basically just a technical move, looking to hold this one for could be tomorrow, could be next week, could be the week after. Who knows? But I spoke about this one in a bit more detail yesterday, so I won't go into it again today. Equities, I'd quite like to start going short on the NASDAQ. I think this will be a really, really nice one, actually. If we could see, I don't really know what I'd want to see here, actually. Probably just a break of the support. Then I would look to just go short and just trade it zone to zone or level to level. So I'd be looking for something very similar. So breakdown of the support, retest, and then continuation. It's the basic way I go about swing trades is wait for the break and retest, and then try and join in on the continuation. GNU, you shorted euro dollar. Fair enough. That be on your head. Actually, I'm just going to move over the chat so I don't have to keep twisting my neck to read it. I could totally imagine Nick and Chandler and James laughing at our chat. Yeah, I've got no idea what you guys are talking about 80% of the time. Currently looking for shorts on gold. Interesting. I was looking to go long on gold, actually. I'm not sure if I will, but the idea is there. Oh, yeah, that's what it is. So I'm just seeing... The problem is that well, not the problem, but the thing is with the markets at the moment is we've just had the rate cut and the forward guidance from the ECB. We've had unemployment claims, and tomorrow we've got more labor data from the US, and we've got the Fed speech as well tomorrow. So I think the markets are pretty much just on pause or waiting, at least foot off the gas a little bit for tomorrow's data. The other thing is we've got this bearish weekly engulfing candle here. I don't really want to buy into that. Obviously, it's closed, but I'd like to see this week's candle just close bullish before I start buying. That would just confirm to me there's a little bit of bullish momentum, and I'm not buying into a strong bearish weekly candle. The H1 looks healthy, actually. Had quite a nice rejection off the support. I'm not sure if Ballout's here, but he won't appreciate that. But yeah, I quite like this idea here. I didn't buy it again. I'm just waiting for tomorrow, but technically it looks very, very solid. So we'll see. So maybe on Monday or the start of next week, I'll be a bit more interested in gold. I said that we will realize when the crash is about half of about to end what we are crashing. It always looks like a pullback when it starts. That's very true. I think if I'm understanding what you said properly, we don't realize it's a crash until halfway through. It is a very good point, actually. Ball outs in gold shorts already. Fair enough. James, we need to chat in private. Explain my support resistance hate and why you'll definitely join me. Yeah, ball out. Send me a DM on Twitter if you want to. BRS, should you enter long dollar Swiss? I'll tell you what, if you can tell me a reason that you want to enter on dollar Swiss, I'll give you my idea. But I'm not just going to tell you because I think that's making it too easy for you. Justify your idea first. What do I think about Euro Yen? I like Euro Yen shorts. I think at the moment it's a little bit tricky just because obviously we've had the hawkish cut. So I think in the short term, you might get stuck in a little bit of noise, but long term, I'm still very bearish on the yen crosses. I don't see any problem there. The euro might put up a little bit more of a fight than we initially planned. You know, when I first started talking about the yen longs, but yeah, no long-term issue, I don't think. USD JPY, I'm going to short, but what should be the target? 141. I mean, I don't know. I was asked this question today by someone in my stream, and the answer was actually very, very simple. When you're looking for a long-term position trade, or even a longer-term swing trade, what you've got to account for is technicals don't really come into play that much. Sure, you can use some technicals as benchmarks. You can say, okay, well, dollar yen's dropped 2%, or we've just broken this 140 key level or whatever. But because the yen long idea is not something I really care about short term, it's a long play. And when you're doing that type of thing, the main thing to pay attention to is the economic developments. So in theory, what you could do is, you could go short here, trade it down to 141, roughly around here. But then you could, if you're just looking at hard tip, probably you could miss this whole move. I'm not saying it will do that. I'm just saying there's potential there if the economics stay in favor of dollar yen shorts, and obviously you could trade it all the way down. You get the point. I'm just saying. I think there's a lot more potential than just 141. But if that's the way you trade, you just want to trade it from sort of resistance to support. Completely cool. I think it's definitely possible to happen. Sorry, I kind of went on a tangent there. Swaps is a problem on euro yen. Yeah, you will pay swaps, but that's just the cost of trading. If you don't want to pay swaps, go to Swiss yen. Pharaoh, you short euro dollar. All right, let's have a look at your trade. Let's get rid of all my drawings here. Okay. So you're short from where was this? 1.08 250 with a stop loss at 1.0845. Okay. Well, I don't know where you take profits, but maybe something like this is possible. If you're going for a trade like this, you might be in some trouble. You might not. You know, this could be an amazing 20R trade. I don't know, but I think that is a very, very tight stop loss. Even for lower time frames, you just barely at the top of the previous H1 wick. So just keep that in mind. I think your stop is very ambitious. When's the last time you heard Paul Tudor Jones? I don't know, ball out. The way I view that is they're very outdated. Sure, respect on the name, great traders of the time, but you know, things evolve, things move on. The way I see it is with technical analysis, it's all about the psychology game. So when you're looking at, you know, a huge resistance on the weekly time frame, who, you know, how many other people do you think are looking at? Do you think Bank of America is going to not look at a huge weekly resistance? I actually made a video on that ball out. If you want to go and check it, I'll put some proof in the video, but I think anything can work, whether it's a support, resistance, fib, RSI, moving average. It's all just how many people are looking at the same thing and how many people are buying and selling based off the same thing. It's self-fulfilling prophecies. That's why I don't really care about technical analysis too much, as long as it's simple enough to make sense. James, I think New Zealand yen and Australian dollar yen is also good. Yeah, I agree. I think all yen pairs are pretty much great. Yeah, Paul, I'm sorry. I think we're again, it's one of those things we'll have to disagree or agree to disagree on. Yeah, again, I think the thing is with technicals, it doesn't matter at the end of the day. It really doesn't. You know, someone could trade. You know, I've seen the guy that won the Robbins Cup or came second last year has got the most strange way of trading. And to be honest, I don't know if it's even real. I don't know if he's trolling or not, but I don't know what the indicator is. Oh, sorry, I don't know what the tool is that he uses. It's some weird, I think it's like fib circles. It's like this or something like that. It's like that. Some of you guys might have seen it on Twitter, but you know, if it works, you know, he came second in the Robbins. You can't really say if that's actually how he trades. It doesn't work because he's proven it does. But you know, there's so many ways to make money in the markets. You know what, Paul? I'll agree there. SpongeBob is better. It's funny. I feel like we agree on basically everything that's outside the charts. Anyway, all right, let's see what's going on here. What is the EdgeFinder giving us? Gold, very bullish. Pound dollar is very bullish. Euro dollar is very bullish. Pound Australian, bullish. Still a European market, although the FTSE's fallen off. So obviously pound, euro, and DAX are bullish. We've got dollar Swiss, Australian dollar New Zealand, platinum, CAD yen, Swiss yen, S&P, Dow, New Zealand yen, Russell, Australian dollar yen, and dollar yen, or US dollar yen bearish. It's interesting. I like DAX. I think DAX is a great trade. I think short Dow is probably a great one as well. Russell, also, I quite like the Russell idea, but I don't trade the Russell, so I'm going to stay away from it. Can we keep shorting CAD? Well, in theory, you can short it for the rest of your life if you want to. unless your sell button gets stops working. Yeah, Paul, I'm not sure what you mean by that. Sassy, you want US dollar CAD? Okay. So I was looking at this one recently, and I really like the technical setup on the daily. So we've come into our fib. We've rejected this 618. Well, so far we're kind of hovering around the 0.5 pullback. But the problem is the dollar's free falling. I don't really like the Canadian dollar either. So I'm pretty much bearish on both. So I don't want to buy. So unfortunately, I just can't do anything. But yeah, the technicals so far look pretty good. It seems the banks have also closed their dollar CAD longs from what I've seen. So yeah, to be honest, yeah, I'd be very cautious on just going long in the dollar at the moment. If you're a dollar bull, maybe just wait for a confirmation. See, I talk for 2 minutes and I look back at the chat and I'm seeing the Simpsons indicator and Bashi wants the Homer confluence. Like, what are you guys talking about? Whatever. Okay, I give up on you guys. I'll do my own thing. Okay, what was I going to look at? Oh yeah, COT. So this was updated on the 28th, so it's a little bit behind now. So we might be waiting for the new one. But from what I've heard, it sounds like options contracts expire. So the next COT positioning will be more important to pay attention to. I've got no idea about options, so I can't elaborate on that one, unfortunately. Yen longs, still looking very, very attractive. NASDAQ longs have also been added, which is interesting. Russell as well. So actually that's counter what the EdgeFinder is saying, because the EdgeFinder is bearish on the Russell. Nikkei shorts also make sense. Oil shorts make sense. Swiss shorts, as you guys know, I'm in favor of that one. There's nothing else too interesting, actually. James, is there more upside for euro dollar? Jack, I don't know. If I could give you answers like that, I don't think I'd be on stream. I'd probably be, in a private jet or on a beach somewhere. In theory, I'm going to say no, just because it's very extended and I'd like to think there is some sort of pullback coming. However, I am now sort of leaning more towards a bullish idea on euro dollar. So, take that as you will. Do what you please with that information. But if you're looking to position for a sort of swing trade, I'd wait for a pullback and maybe start looking to go long instead of short now. Euro pound. I'm actually short on euro pound. I took a short position yesterday. It was actually just after I spoke to Nick. I think we'll talk about mean reversions or DCA or something. So I took a short roughly around here. I'm looking to scale in. This was just the first entry. I'd like to scale in at this previous high. I think that would be really the optimal entry, and then sort of just hold it. So the typical behavior of euro pound is very simple. It's very difficult to trade based on typical price action, support, resistance, pullbacks, that type of thing, because it's very prone to these aggressive moves up and down. But we often have an aggressive move followed by an aggressive downside, aggressive downside, aggressive downside. So I'm just positioning for the same thing now. So it might be a couple of days of pain, maybe a week of pain or drawdown, and then, if the market repeats itself, then it should be fine. Ball out. I completely agree. I can't wait to be doing that. No, the Hulk's ugly. The Batman is where it's at. I don't like the Hulk green that they use. I don't like the Pepsi either, really. Does staying with a negative person affect your trading? Yeah, of course it does. It affects everything. You are your environment. It's like, why do you think poor people stay poor? Why do you think rich people stay rich? You know, it's not just because of things they do, it's because of who they hang out with. It's the same thing with positive and negative people. I believe in the law of attraction quite a lot, actually. I don't really do it or practice it, but I think it's a real thing. Jack, yes, I would say it's a tough time to trade. I think the markets are a little bit all over the place. It's hard to really get into trades at the moment. If you've been on the wrong side, you'll have had a very nasty stop loss. So yeah, it's definitely not an easy period. So I was saying again earlier on my stream, we were talking about it. The markets kind of have two situations as far as I'm concerned. You have a period where, and this can be applied across all markets, but I'll use Eurodollar as an example, where it's essentially brain dead and you can just trade it, follow the trend, and easy money. Then you have situations like what we're in now, where the markets are a bit more fearful. There's a lot more going on. So we've got obviously Germany, we've got Russia, Ukraine, possible peace deals, we've got trade war, we've got risk off market. So it's just a little bit in the air. There's a lot going on. So at the moment, yeah, not so great for trading in my view. You guys need to go outside. Oh, don't say that. It's not. No, don't. You're gonna have to I'm gonna have to order a new hat now. Yeah, I kind of agree. Actually, ball outs. It's yeah. What's outside? Yeah, not that much actually, especially in the UK. Thoughts on copper? I'll be honest, Joseph, I've got no idea. I don't trade copper. In terms of like the drivers, yeah, really no idea. But the technicals actually look quite simple. So if you get a break of this resistance, I could quite easily see copper coming back to the previous high. Around 5, I think will be a pretty good key level to have a take profit. Obviously, if it doesn't and it rejects, then yeah, maybe look to take it back down. But I basically just told you the markets go up or down. So unfortunately, I can't give you much insight there. I'm Australian dollar yen short from value area, volume profile, and the help of EdgeFinder. Do you think it's a logical trade? Christopher, yes, I think the Australian dollar yen is a good idea. The Aussie is pretty weak at the moment. Yen, I'm very bullish on long term. So yeah, I think it's a great idea. Australian dollar US dollar shorts is not the best idea right now. You're selling. Actually, let's just check the charts. Yeah, you're going to be selling a short-term uptrend, and the dollar's pretty weak. Yeah, I'll be honest, I just don't see much opportunity to short at the moment. Elite traders, do you have a bunch of traded partners? Yes and no. I've just started a new fund, which I'll go into in the future. Is still very early, but yeah. So I've got that with one guy, and then Elite Traders. We've actually just brought on a new trader, and we've got another trader there, obviously as well. But But yeah, that's it. I keep my circle small. $100 profit right now. I'm taking profits on this scalp. Really nice. $100. Good stuff. Do you think USD will be a reserve currency? Well, it is a reserve currency. Do you mean will it lose its reserve currency, or will it stay its reserve currency? Yes. Now, for now, anyway. I don't think there's anything that can really dethrone it at the moment. I mean, I would bet heavily that will change at some point, but when, don't know. And when I say that, I don't mean it like next week. I mean, maybe in the next sort of 50 years, possibly 20 years, maybe. I really don't know. That's quite a big thing to try and forecast, which I don't really want to start doing. I'm confused. USD COT is bullish. Why is it going down? Because COT doesn't drive the markets, really. It's sentiment and economics that drive it. Don't forget, just because institutions do something, they can still be wrong. They actually don't make much. In fact, most of the time, actually, institutions lose money. They're not something you should look at and be like, wow, they're all long. Why is this happening? They are actually pretty stupid. I'm going to be honest. I'm speaking generally. Obviously, there are some great places like Jane Street are quite good. Credit Agricole is good, but yeah, day to day, not great. And actually, you're kind of wrong. The dollar has lost longs, and they reduced. I'll restart that. They reduced longs, added on shorts, and their net position is actually now negative. So they, again, generally, they're actually positioned well at the moment. BRICS will succeed eventually. Yeah, very, very well could do. But again, it's a big thing that I'm not, you know, I'm not going to focus on that or even think about it just yet until there's, you know, a bit more of a sign that something like that could happen. Then, yeah. Tomorrow, NFP, absolutely right. $704, I'd say initial. But to be honest, jobless, unemployment, NFP all falls under the umbrella of labor market. So it's all, I mean, ADP, not so much, but keep track of it all. And then you can see, okay, the general labor market is stronger, weaker, cooling, heating up, whatever. And then you can start applying that with inflation. Then you can start looking into interest rates, and then you are pretty much on track. James, that surprises me. You said about institutions losing money. Yeah, Lee James, I mean, I can't show you now because I haven't prepared it, but next time I come on, I can definitely get some stuff ready, and I'll show you their results. I mean, don't get me wrong. When I say lose money, they're not losing like 20% a year or something. When I say lose money, I mean sort of an average. So Credit Agricole year to date from February, so February 24 to February 25, they made 7%. So when I say losing money, what I'm referring to is if you copied Credit Agricole and said they're a huge institution, they move hundreds of millions, they, you know, bank reports, they amazing, beautiful, you know, pedestal. But you could have invested in the S&P and done better. You could have given Nick your money and done better. You could have given me your money and done better. You know, they're not institutions. Yeah, they have a team of analysts, risk management, blah, blah, blah. And often the research is very, very good. Their ideas are very, very good, but their execution is not up to retail trading standards. And it's not because they don't know anything better. I'm not saying that they're actually bad traders, but when you look at the way institutions trade compared to what retail traders do, it's very, very different. It's not really even comparable. So a lot of the time they're actually just pushing orders through. It's not actually them coming up with ideas and saying, okay, I'm going to trade this on behalf of all my clients. But again, it's it's very interesting, but it's a very long topic. And again, I could probably prepare something. I could maybe get a document together with actual stats and things for maybe the next segment that I come on for. But anyway, the point is that they have compliance, risk compliance. They have portfolio managers. They've got clients. So it's not like they can just put, if they really like a trade, they can't just go and say, okay, I'm going to put 5% on this trade, or I'm going to go and put 2% on this trade. They've got to stick within parameters. Whereas obviously we don't. We can scale into trades as much as we want. We can do whatever we want, which obviously is a negative because most people lose money. So anyway, we'll move on because again, it's a long topic and I could talk for hours about it, and I don't want to waste your time or take up too much time. Out of curiosity, what is more impactful, initial or continuous? Yeah, Lee, I just answered that, which is how I got into the interest rates section. So I'd pay more attention to initial, but the whole labor market in general is important to track. Lee, you'd be keen to know more? Okay, yeah. I touched on it briefly in my seminar in Madrid. That's on YouTube, so if you want to go and watch it, you can. It's just on my channel. But yeah, I'll get some more details and I'll cover it later. So it'll probably be next week. Actually, I might be live tomorrow. I might be on here tomorrow, so maybe I'll get something ready for you. Warren Buffett said you need 4 to 5 good decisions from 20 to be rich. I'd say that's pretty accurate. I mean, who am I to argue with Warren Buffett? But I'd also say that's pretty much on the mark. You need one good business. You need to make some good decisions within that business, and you're pretty much set for life. Anyway, is there any chart things you guys want me to go over? Because I'll be honest, I'm completely flat. I've got no interest in the markets right now. So I'm happy to go over some things if you have anything that you want me to do specifically. If not, we'll freestyle it. We'll come up with something. Ball out, of course, you want cattle. I'm not doing cattle. I don't even know what the ticker is for cattle. All I know about live cattle is that the cows go moo, and there's a pretty good steak now and again. Lincoln, you want EJ? Okay. We did cover EJ, so I won't go into it too much. My thinking at the moment is I wouldn't be surprised if we either see a continuation of this sort of sideways movement. In fact, that, or if we drop. Now, the reason is, excuse me, I'm bullish on the yen, but I'm now starting to lean a little bit more bullish on the euro. So I'm just thinking, are we going to start seeing buying interest in the euro, which is likely? So we'd really be seeing a fight is between yen bulls and euro bulls. So yeah, I'm not too interested, to be quite honest, in the short term. I think long term we will see a sort of continuation to the downside, but it might just take some time. Each cattle gets you 3 to 4K. So one cow sells for 3 to 4,000. There's no way. Unless it's like Wagyu beef. James, how do you calculate swap fees? You've just given me a great marketing thing there. So if you go to the EdgeFinder, use code ELITE, get a discount, buy it, go straight down to carry trade scanner. You'll see here what you'll be paying. So the the interest rate divergence, this is what you pay. So it's base currency minus quote currency is your fee or what you get paid. Very simple. Again, I've actually done a video on spreads, on swaps. So if that's what you want to learn about, go on my channel. You can watch the video there. Ball out. I just helped a Nigerian get into an investment on a farm. So it's something I'd be interested in. I'm always looking to invest. Did I touch on GU? I didn't touch on GU, actually. That's one of the main ones I didn't talk about. GU is tricky because I'm actually pretty bullish on the pound at the moment. Because of the sticky inflation in the UK, it seems like the market's priced out a few rate cuts, and they're expecting Is it 50 or 75? I can't remember off the top of my head, actually. It's bad. I should have that on the fingertips, but I don't. I'm not in a position where I'd want to swing trade the pound long because I hate the pound, I hate the UK, so I refuse to buy it. But it wouldn't be a shock to me if we do see pound dollar slightly higher, maybe even come back to the previous highs. I think that's, again, it might be a little bit optimistic, but if we start seeing pound dollar creep higher, it wouldn't shock me at all. Thoughts on NFP? I would expect NFP to underperform. And that's just based on ADP, because ADP was really bad or really undershot. And ADP it's not a great signal for NFP, but it can give a slight nudge in terms of what you could expect. ADP underperformed, so maybe NFP will as well, but I'm not in the job of predicting news. I would say maybe slight surpassing the previous result. I don't know. We'll see. I'm not here to try and predict news. I'll just see what it is and then add it to the list of data. How much yearly growth in percent we expect from the market? Depends how good you are or bad. I don't know. That's like, how long's a piece of string? If you could be the next prodigy, you could be the next huge godly trader that can do 10% every single month consistently, then you'd be doing 120% a year. Or you could be very, very average and do 1 to 3% a year. 1 to 3% a month. So collect your data, do your stats, figure out your average, and then there you go, you'll have your answer. Medium stake. No, it's got to be medium rare. Medium rare is fine. I don't like rare. I don't like blue. I don't like well done. But yeah, medium rare is like the perfect amount. I'm sorry for any vegetarians. Yeah, blue steak is basically raw. I think essentially you would just cook it on a very high temperature for a couple of seconds, and that's about it. And then you'd leave the middle essentially completely raw. And that's not for me. That's a bit too much. Bro, 3% in not average. 3% is about average. Very, very good traders. And when I say very good, I'm talking about the top percentile of retail traders average about 3 to 5% a month. And I'm saying the top percentile. So if you're average retail, you could probably do about 1 to 3. Bearing in mind, when I say average, that's still in the top percentile of retail traders in general, because the majority lose money. When I say consistently, maybe I should say average. Average is pretty, 3% is not crazy, because what you could do is you could have a very good month of 6, 7%. Next month could be 1 or 2%. Then you could be 0%. Then you could be another 2 or 3%. And average over the course of 2 or 3 years, you could end up with an average of 3%. It's not out of this world. I think overall Trump will make a decision to remove tariffs this month. I don't know. I think his ego is too big to do that. I think he's going to see this tariff war through. Yeah, risk management is always a factor, but you can be the best risk manager on the planet. It doesn't mean you're not going to have a losing streak or a losing period. Okay, sorry, I was just reading something. What's the trumpet for? seafood. I've got, oh no, sorry, not got. I had a prawn biryani last night. That was very, very good. Although it came with the tails on, and normally I don't mind that, but they mixed it up. It was a takeaway or takeout, whatever you want to call it. And I didn't realize, so I just bit into it and got prawn tail in my mouth. And I nearly complained, got a refund. But then I realized probably not the best idea to annoy the local takeaway. EUR getting some traction. Is it? Let's see. It is. Yeah, we're getting some buying in here. This was a horrible position to take, actually. It's unfortunate to take that. Yeah, we are seeing some. Actually, Euro Swiss isn't doing that well. It's doing okay, but it's not doing as well as its Euro peers. Yeah, Euro dollar is just on a run. I feel very sorry for anyone that is shorting Euro dollar at the moment. Could have got a refund and placed it in gold. Yeah, absolutely could. Can I cook? Yeah, I really enjoy cooking, actually. I'm not good at it, but I really enjoy it. I was actually going to be a chef at one point. When I was in high school, I did the cooking exams, and then I did the first day of college in catering, then left to do something else. But that was what I wanted to do for 3 years of my early teenage life. Sean's got it. Yeah, I quit catering to actually go and cook in the markets. Shadow, I kind of agree and I kind of disagree. This isn't it's definitely not a crash, but I wouldn't say it's a normal pullback. It's very aggressive. It's yeah, I'd say it's like the middle ground of a crash and a pullback. If it was a crash, it would be a lot sort of more like, basically what it's doing, but lower. But yeah, it doesn't matter what you call it. The market does what it does. It's the same on everyone's charts. Lee, how do you burn a salad? Why are you warming up a salad? Alan, I noticed that as well, actually. Yeah, yields aren't following the dollar. So the JGBs, so the Japanese government bonds, pretty much following the yen. The UK gilts or bonds, not, yeah, pretty much following, but the yields, yeah, it's interesting. We'll see if we see a follow through further down, but yeah, it is a bit odd. Jim, seems rate cuts not hurt EUR. Kaidos, you're looking at rates wrong. We had a rate cut, yes, but it was a hawkish rate cut. So I've tried to explain this quite a lot of times on different platforms. The markets don't care what the rate decision is. They're looking for forward guidance. The markets are always looking forwards. What's next? What's coming? What's the situation? So we've priced in the rate cut weeks ago. It was already expected. So when it came out, it's not a big deal. But what the markets are now looking at was the tone and the wording of the press conference or the statement. And the statement was less restrictive, or said they're going to be less restrictive, which is bullish, or hawkish. Sorry, not bullish. So that's why we've got some buying interest after a cut. Alan, you got a new camera setup? That's nice. I'm proud of you, or happy for you. Alan, I saw your segment. I don't know if it was yesterday or the day before, but I like your background. Wherever you are in the world, you've got a pretty cool city view. Could you check New Zealand dollar Swiss for shorts tomorrow? Okay. It would make sense, actually. I don't mind this idea because we're in risk off, benefits Swiss. New Zealand dollar's not in a great place with obviously the Chinese data along with the Australian dollar. So if you were going to go for a short, I would look for some sort of correction into the previous high or some sort of pullback into a previous high. I mean, you could actually sort of justify an entry here because you've just seen the price pull back around 50%, have a little bit of rejection so far as previous level. Yeah, technicals look fine, actually. Hi, James. A couple of days ago, I talked about being in a short position on dollar yen and complained it was in drawdown. I'm glad I have not closed my trade. I respected my strategy. It went in profit. Loris, that's what I love to hear. No emotional trading, just trading the plan, stick to the rules. Well done. You deserved that profit now. Yeah, good stuff, Alan. Okay. Right, we've got a couple of minutes, and then I think it's Chris. Let me just double check if it is Chris coming to take over. It normally is after me. It is. So you've got Chris Pulver coming to take over in just around 5 minutes, give or take. So if there's any final questions for me, let me know. If not, then we can just sit here and continue the yapping. Euro dollar shorts are crying. Yeah, they are. Yeah, it's kind of crazy, really. Also, what I forgot to mention is capital flows, which are quite a big dynamic of the currency markets. When you see currency outflow of a major, specifically dollar, you often see inflow of counter currency. So it could be the euro, pound, yen, which is obviously benefiting things such as euro dollar longs, yen longs. So keep that in mind. Is there news at 10? Not my time. I'm not sure what time zone you're in, gangster, but I don't think we have any news left for today, do we? Let's just check. I don't think. Oh, we've got the FOMC Waller speaks, but oh wait, hold on. Trump speaks. Maybe. Yeah, we'll see. Eric, thank you. It's good to see you here as well. I appreciate the kind words. Why the sudden rush of volume at 10? Oh, do you mean previously? Do you mean on? I don't. Again, tell me what time zone you're in so then I can check. I don't know. Yeah, apparently there's a Trump speech. Let me find a different calendar so I can have a bit of a better look. I don't know if I'm just being a little bit out of touch. I just need to double check. I didn't realize we had a Trump speech today. Okay. Yeah, I don't see it on. I don't see it on this calendar. I don't know. Well, I'll have a look. Anyway, whatever. I want to cry. Fair enough. Why do you want to cry? Gonna blab the markets into chaos. What's Mahjong, Sean? I've got no idea what that is. Yeah, Jack, we did have Trump's speech earlier this week, but apparently on Forex Factory says we've got another one today, but yeah, Alan, me too. I was in a couple of euro shorts. I took a euro dollar short and a euro CAD short. Luckily, I actually wasn't DCA in those ones. They were proper, with stop loss trades. So saved myself some money there. But yeah, these guys short on euro, they're feeling some pain. Okay, right. I'm starving. I need to get some food after this. I'm being manipulated into wanting to go long on the S&P. I'm not going to. I think it's a little bit of, I don't know. I think it'd be a silly thing to do right now, but it looks really, really nice. We're having 3 wick rejections down. We've got the middle Bollinger support. RSI is oversold. Technically looks good, but I just can't justify it with risk off. Oh, Sean, you already took long? Yeah, I don't know. I'm not sure I'm confident enough to do that just yet. Can you give me ideas on what we can do with a strong pound? Well, if the pound's strong, you'd want to buy it, wouldn't you, Kit? I don't see really what else you could do with it. I know that's probably sounds like quite a sarcastic answer, but yeah, it's true. So you would want to go long pound cross. So, you know, pound dollar long, pound CAD long, pound Australian dollar long. Obviously, do your own research, just spitting out ideas. I own GBP in IK. Okay. Oh, in UK. Fair enough. Good entry for long indices with that bullish engulfing candle. What do you mean this one? Because yeah, I don't know about that. You TP here? Oh, that's fair enough then. Good job. It's a gap fill play only. Where's the gap? Let's have a look. Didn't know there was a gap actually. Yeah, I'm not seeing an open gap here. Oh, unless because you're on SPY, maybe that's different. Either way. But I just don't know how to use it to my advantage. Oh, I see. Okay, so you're talking about physical pounds. Well, what you could do is earn in pounds, buy in yen. So typically, if you have a stronger currency, you would want to earn it in that currency and then spend it in a different currency. But I'll be honest, it's a bit of a hassle. There's no need to do that really, unless you've got a lot of money. But yeah, if you're not in the UK and you've got pounds, I'll be honest, just sell it. The less links with the UK, the better, in my view. Oil's really moving down. I'm not sure if anyone remembers, I was talking about the $65 a barrel at one point. It seems like we're on our way there. Yeah, just slightly off, actually. This is another one you don't want to get trapped in, is oil. I'm still very, very cautious, and I think it does have further room down, actually. I might start buying oil if we can come down towards maybe 55. Yeah, 55 to 50. Maybe I'd look to buy it, but just now it's, yeah, maybe a little bit further down. Kit, I really don't know, my friend. I mean, if you've got digital pounds, like in a bank account, just open Wise, just get a Wise account and transfer it into a different currency. That's what I would do. Or that is what I do, actually. I earn in dollars. Sweet. Okay. So, guys, Chris Pulver will be here in a minute or so, I would assume. So, again, if there's any final questions, let me know before I head off. If not, I think I'm on tomorrow. I'm not 100% sure. If not, then you'll have to, I'm really sorry to say, but you'll have to wait to see me next week. Bashi, I will see you very soon. It's good to see you today. Okay, sweet. Sorry, guys, I was reading something. Chris apparently is here now. So, guys, I will see you all later. Thank you for being here, as always, and thank you for having me. Don't get margin called. I will see you probably tomorrow.
Hey everybody, thanks for tuning in to today's A1 trading session. We love engaging with our audience, talking shop, taking requests, and sharing our favorite setups. It's about that time where we're going to review a bunch of indexes, stocks, currencies, gold, silver, Bitcoin, and pretty much anything else and share our insights. If you're wondering what trades I'm in, if you're wondering what trades I'm taking, and you'd like to see exactly how I'm trading everything, you can actually follow my trading signals. If that sounds like something you're interested in, we'll share a link in the chat. You can sign up. You can sign up directly with the link or speak to a support rep if you have any questions. If you're asking, what do I trade? Pretty much everything. Indexes, ETFs, stocks, options, futures, Forex, and crypto. Thoughtful analysis, active trading. Check it out. And now, back to the show. Hey everybody, happy Thursday. Welcome back. Good stuff for the morning, kinda. We had an interesting gap lower. Look, we are really close. We're just talking big technicals here. SPY is still sitting right around that 200 moving average. It's not quite there yet. I still think we're going to find it. I think non-farm payroll could be a good reason to find it. Taking a look at some levels today. My put call sentiment is pretty much dead even. So I wouldn't be surprised with a non-farm payroll day coming into tomorrow that the market's going to stay somewhat choppy and indecisive, with tomorrow being a bigger catalyst. So we had a close yesterday, gap lower. We're filling the gap this morning. I grabbed a quick win on the SPX. I had a $1.80 credit, closed it down for 80 cents. Just grabbed a quick dollar, and I have another trade in that is just above here, just below here, looking to see if price stays relatively choppy today, and just go ahead and get time to work in my favor, and then see a 235 credit, hopefully decay down to about $1.85 or less. That's my profit target. So I will be watching. I don't think the market can get too far ahead of itself. I still think this 200 moving average stuff has to get hit. SPY, it's right there. SPX, it's right there. SPX, even on this technical analysis side, I mean, the 200 moving average is right here. I could see price playing out this way. We did take out, so this little flush to the downside did take out recent lows, and tested the same low over here. If this is any type of swing, and the bears are going to have the opportunity to kind of fulfill the swing, high, low, lower high, lower low. So if we have a bit of a relief rally, there's a couple ways that plays out. Either this relief rally is going to be just pulling back towards around that 6,000 handle, and then the bears take control again, or there is a really quick indecision area, and this market flushes down and then just gets scooped up from the bottom. I still think that April to August connection, putting this around 5,500. I mean, we may not get there, but this 200 moving average to that technical support on 5,500 on SPX to me is still a spot where I want to be positioning for. I'm going to be positioning for long, but I'm going to be patient on like this. I don't think this is the safe spot to call the bottom. Right? It feels a lot different that the bulls are at least stepping in a little bit in the near term, that it's not as rough. Yesterday's pushed to the upside was pretty nice. I want to say I was up like $60,000 or $70,000 in an intraday swing in my account. It's all like I've had a lot of like open P&L swings over the last couple of days. So I'm just keeping a close eye on things. today I'm in the red, but still, maintaining a six-figure P&L year to date, but just got to watch levels closely. Getting back some nice buying power, which is good. And we'll see how it all plays out. So I'll be watching this position for right now. Gap fills. Let me see what that $1.80 was doing this morning. It's probably trading for like 60 cents or something like that now. 50 cents, 55 cents. Yep. So that's $1, $20, $30 out of the original trade. So keep a close eye on it. We do have non-farm payroll tomorrow. Hopefully, I don't know. Hopefully, we're still kind of range bound today for one of my other trades running. The trade that we took yesterday during session, that was a nice little winner. Put this in $1.55 credit. That was a 0 DTE. That was a reply trade management update. The SPX 0 DTE entry for $1.55 credit, closed for $1 debit. Time decay works quickly in the 0 DT environment. So that was the trade posted yesterday in Pulver Alerts. That was right in here. We were in session, put in on another trade right in this window, and we went down a little bit, up a little bit, and even stalling here for the afternoon. Nice way to grab some extra premium on the day. Jay Powell has a speech tomorrow. I didn't know that. Let's have a look. This is tomorrow's news. I'm going to be out of office tomorrow, so it's going to be just watching from the phone. This is the main bulk of news that we have in the morning at 8:30 a.m. We do have CAD employment as well as dollar U.S. employment news with non-farm payroll. 159 is expected, 0.3 for earnings, and 4% is going to be an interesting unemployment rate. So, I mean, look, Q4, as far as I know, tech was cutting jobs. Government's on a hiring freeze. I don't think they've necessarily started to lay off federal workers. I know that Doge is making the recommendation to do that, but I don't think it's necessarily started. Anyway, 4% is one of the lower prints we've had in a while, right? So 4%, we got back into the threes back in 2022 and 2023. That was the tight labor market that everyone's worried about. I think the big concern this year would be that we go from a 4% to 4.5, where we start creeping up into the high fours. That might be where the Fed starts to take notice. And I mean, I don't know. People could probably make a compelling argument that right now, like, unemployment is actually higher than what the data says, but we don't know. So I'm probably paying attention closer to, if we have average hourly earnings higher, that's inflationary. If we have unemployment rate going higher, that's a concern. I still think there are some potential issues under the surface, but news is news, and I still think with the S&P with this bar count and the Dow with that bar count, I'm not crazy bullish at this position. I think non-farm would be a great excuse for the market to dump for the day and then find some support, and then we can start looking at position for a better rally in the next maybe the rest of the month. What do we have coming next week? We have all of our inflation data coming next week, right? So if there's any reason for the market to push down towards this 200 moving average or lower, I think CPI could be a similar reaction, where the market for some reason says, hey, higher CPI, let's go up and retest all-time highs. That's what happened back in February. We saw the same thing happen in January. It's like, I don't know why the market takes hot inflation news as stocks should go higher, but that has been the case. So anyway, we'll see how it all plays out. But like I said, I'm out of office tomorrow, so no trades for me. I'll just be spot checking on the phone. But that makes sense as far as the 200 moving average goes. I'm not crazy bullish unless we tap these levels. We at least have to tap this 200 moving average. So SPX, I want to see it at least touched. XSP, I want to see it at least touched. SPY, I want to see it at least touched. RSP, we are right down at it right now, but I'm already dollar cost average into the RSP at the same price. The only way that I'll get this to go, if I'm going to add more to RSP, it's going to be on a fresh low. Okay. Futures, yes, we tapped the 200 moving average. Futures market is red on the day. Micro futures, same thing. We tapped the 200 moving average. We're not quite there yet. This is why I was saying we could do a flush down, have some indecision, and then have one more push downwards. It's kind of a bear trap, but it might sting. Look, there's a gap here to get filled. The market could be coming after that gap fill. There's pretty good technical support around that 5,500 zone. So just saying, I don't know if the flush is done yet. Because look, what I'm doing is I'm basically preparing for a little bit more downside. If I prepare for a little bit more downside, then if we get it, I'm prepared for it. I'm hedged for it. I can have some profits on that, and then I can also kind of brace for the positioning where I want to get more bullish. And I just think right now is not the time to call the bottom. That's all. Okay. I think lower CPI will be printed, not higher than 3%. I mean, what's it? It's not even forecasted for next week, though, is it? Next week forecast on Wednesday, we have no forecast. So year-over-year CPI previous was 3%. I mean, given the last month or so, I would imagine the data is improving, but we never know. Same thing with PPI on Thursday. So yeah, I could see, non-farm maybe tapping the technical levels that I want, and then CPI data could come in pretty solid. Solid meaning like an improvement, and the market might take that as a good sign. We can have a look also at the 10-year yield. So the 10-year yield, this was my concern going into this week. The 10-year is up another 25 basis points. Like, look at how sensitive this thing is. This thing's up 24 points. So as far as like borrowing costs, like a higher yield is not a good thing. But are we going high, low, lower, high, lower, low, lower, high, lower, low? I would hope so. That'd be nice to see it continue to make fresh lows, but I don't want to see this high taken out. I'd like to see a lower high, lower low. If there's any type of the issue with this is I don't think this is easy to trade technically. I think this is just clearly reacting off of what the bond market is interpreting as either recession is in the works or inflation is running hotter. The Fed is making a misstep and miscalculation on monetary policy, or any combination of what I just said. And if that is a reflection of this, like the scary part is this thing, higher is not a good sign. And I still mean this. Anything greater than 5%, I think it's going to break the market. I think we're going to see either the bond market break or the stock market break. And, we know how that story ends. It's usually going to be catastrophic and terrible. It's going to be just monster capitulation moves, and it's going to be lots of volatility. At some point, when the pain is done, it's an incredible buying opportunity, but it is about surviving to make sure that this doesn't break the bank. And that's where most traders, they struggle. Is if something terrible happens, most traders lose and they have to just start from scratch. I'm on the other side of that fence where I don't want to ever take huge losses. I want to be surviving and also look at it as, do I have the cash ready to be opportunistic? So I'd still like to see the 10-year continue to make lower highs. The dollar index continues to push lower. The euro continues to go pretty nicely to the upside. The Japanese yen, the Swiss are stronger today. So dollar yen making some progress to the downside. Aussie yen. What did I say this week on Aussie yen? I said, watch this flash crash low. If this offers a support zone, again, not just calling the bottom, but looking to maybe scale into this with some small trades, trade very, very small, look for some confirmation. But I could see the yen crosses bouncing off these major lows. This July to August swing, if we bounce off those levels, I could see a lot of that going on. CAD yen, same thing. Watch and see how price behaves on a smaller time frame off these levels. So you start to see some buy zone confirmations. This could be a good spot for a very low risk trade. Low risk trade if the market pops back up here. That's a low risk trade to confirm this on a smaller time frame, and you can see this thing pulling back. I mean, this is a 1,000 pip move, so it's not going to be perfect. I say like, oh, the stop loss is so tight. I mean, you might have to have a couple hundred pips of wiggle room, but if I took a small position, and let's say that added up to like 1%, and then price actually goes my way, well, that 1% can easily become 2, 3, 4% gain. But watch closely. I think a lot of the euro pairs, a lot of the yen pairs might offer this bounce off that August low. So the euro yen is very different. Why? Well, we behaved right off of this level, but we had just an aggressive rip on the euro. I'm going to attribute a lot of that to the drop in the dollar. The euro just got very, very strong in about 3 days. So what did it do technically on the euro yen? right where I said, watch these flash crash lows from July to August, and it responded really nicely. It's up 500 pips. Pound similar, but pound was not nearly at the lows. So euro yen was really nice. Swiss yen, right back down to the same lows. I'm already out of that trade. New Zealand yen, watching similar to the Aussie yen. Here's your flash crash low, right? So if you're watching carefully, maybe scaling in entry 1. If we come back and revisit the low, entry 2, look for some confirmation on a smaller time frame, stack up some legs and see if we get back to range levels. If this low holds, there's good reward to risk trading opportunities on these yen crosses. Okay. All right. Dollar pairs. Let's go some other FX crosses first. I'm still long Aussie CAD. I'm still long Aussie Swiss. I'm still long Aussie New Zealand. I'm out of the Aussie dollar, but it is still going up, which is nice. I protected some profit right about. It's still current price. I'm not really mad about that trade getting out early. New Zealand dollar is now up to some profit. So if the New Zealand dollar heads a little bit higher, I've got a chart alarm at 5,800. Some pretty good structure there. I'll probably end up grabbing some pips. This would be trade 1, 2, 3. I'll take a small loss on 1, take a winner on 2 and 3, and walk out with some profit. That'd be the Kiwi dollar. Dollar CAD. Looks like this swing is potentially happening. I honestly, I still like this trade better. If this is a topping pattern on the dollar CAD, I wouldn't mind looking here to get long again and see if we actually have a new trend. I don't know. Maybe this is still a range trade. Maybe. But who's offering a little bit more carry right now? If you were long dollar CAD, you have some carry opportunities, right? Your CB rates, your cash rate for Canada, I think is down to the 3%. Canada is 3%, and the U.S. is still hanging out around 4.25, 4.5. So it's not fantastic carry trading or positive swap, but it's better than getting charged. So if this plays out with a symmetry move, high, low, lower, high, lower, low, I would like to scoop up maybe some dollar CAD in here and try to get back to these highs. If we break and go higher, man, 150 on the dollar CAD or 155 on the dollar CAD. You just look left on this chart, you can see that it's possible, right? Now, I say possible, but maybe I need to have a plan, because if all of a sudden this dollar CAD is topping here, topping here, topping here, and we come all the way back down to 125, that would be, I find that hard to believe that the dollar CAD is going to drop all the way back down to 125 versus this breakout of going from this low to high and then pausing, this low to high, pausing. Let's say maybe this is a 1, 2, 3, 4, 5. Maybe that is it. Maybe it's just a big range. But I guess we can't ignore this. If it does respond to this as a support zone, there's room to get back to the highs, and there is room to break. And that's why I want to go to the higher time frame. Look left on this chart. What's crazy about the dollar CAD is going back to 02 with retail pricing, this is as high as it's ever been. 155 to 160 is as high as it's ever been. So you got to wonder, this back and forth tariff stuff with Canada, Mexico, the US, how does the dollar CAD end up playing out? Time will tell. But I think we're creating some rougher relationships right now, some friction in the trade agreements. And I think economically, I would still say the U.S. is probably stronger positioned for the economy than the Canada is right now. But I'm not going to make that big assumption yet. I mean, if we pull back to 139, this would be a pretty simple past resistance becoming future support. And if we get a bounce there, then off we go. But even if we traded a 139 back to 145, that's still a good area to trade. So I'll keep a close eye on the dollar CAD. I think there's some trading opportunities ahead. Right now, I mean, if you're interested in a swing trade, it would just be it'd be a swing. I mean, it's that easy. If you are taking a stab at this for a swing, stop loss above, set your percentage risk, whatever that is. And if it goes into profit, you're looking to protect it. High, low, lower, high, lower, low, easy symmetry. That's a good profit target. I've used that, a lot over my career. So not bad. Dollar Swiss, I want to see some pullbacks. We're getting more pullbacks in dollar Swiss. That actually makes me pretty happy. This is another position that if we come back into these lows, then I'll probably start scaling back into more dollar Swiss and then take it back up to range highs. Okay. We've taken a look at like the Euro Aussie, which still won't stop going up. Euro Aussie has been, this is a crazy amount of candles, by the way. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 candles in a row on the Euro Aussie. Wow. 10 candles in a row in the Euro Aussie. Another, huge explosive move on the Euro CAD, probably another 10 candles on Euro New Zealand. Yep, very similar. And then the pound crosses, pound turning a little bit faster, pound CAD a little bit faster, pound New Zealand's a little bit faster. That's good. Euro pound is probably pushing higher. It is right up to that 200 moving. Look at this thing. This currency pair never moves. And in 3 days from 82.60, I mean, it's not a big move. It's about 140 pips. But when this thing takes, usually a single day of this currency maybe gives you 20 to 30 pips of movement. We've had 140 pips in 3 days. There's clearly, something going on here. So I just think a lot of this has to do with, fiscal policy is ramping up in Europe, and it's more Eurozone, it's more Germany than it is UK, which is why the euro is getting the nudge more so than the pound. But if you look left on this chart, buying around 82.90, 8300 is a really strong support level, and that's continued to hold really nicely since 2020. So anyway, not terribly difficult. Indexes, still watching. Tomorrow's non-farm. We're trading kind of inside candles here for the last couple of days, which I don't mind. I don't think that's a bad thing. Markets at least stalled a little bit pain-wise, which I think is good. One thing I did see online is there was a record amount of puts bought. This would have been yesterday. SPY put volume spiked for the third highest level in history. The previous 2 spikes were bottoms for the S&P 500. The Q put volume made a new all-time high yesterday. This is according to Zero Hedge on Twitter. So again, that's where typically traders are getting it wrong, or if there's record amounts of buying, then typically that can signal like, okay, everyone's buying for protection, so they're going to get that money. Again, I still don't feel comfortable saying this is the bottom, but I would be watching to see, okay, this makes some sense that we have a bottom that is near. So this candle from, I think it was, what day was this? Was this Tuesday? Was this our wild Monday? Yeah. So Monday this week was a pretty wild day. Day was a big indecision day. And so far, Tuesday, Wednesday, Thursday, we are still sitting mostly indecisive. We're still kind of trading inside everything for Tuesday, Wednesday, right? So Tuesday, Wednesday, Thursday, still trading kind of inside this. Non-farm, whether it breaks higher or lower remains to find out tomorrow with the news. Okay. What else? Let's go top down. Dollar, which is dropping again. This is a wild move. I will say this on the dollar. 4 candles in a row. This is 1, 2, 3, 4 aggressive candles in a row. It is pushing very inefficiently. I'm not calling the bottom here. This is what seems to be a falling knife. If you're looking at dollar direction on smaller time frames, probably trends and pushes. The dollar's clearly getting unraveled very, very aggressively. That being said, though, if we do just go straight down to support, would anyone be surprised if the dollar catches a bid again? I wouldn't, right? What goes down inefficiently typically starts to bottom and stall once we get oversold conditions with some extremes, and then we start to come back up for efficiency. So the faster this is going to the downside, the more likely this is going to find support and then start to eat back into these inefficiencies. So, I mean, it could still fall. I mean, the dollar could fall now. I mean, my 106 to 105.50 handle never really broke the trend line. This is why, I mean, I'd say I stayed out of trouble with a lot of the dollar stuff is it never broke resistance, right? So forming a low in this 106 to 105.50 area didn't really happen. It thought about it for a second, but it never broke the trend line. So no real reason to buy the dollar. But anyway, as this is falling, if there's more to come, it's pretty simple to me. If the dollar comes to this area, look for some indecision. There's going to be some manipulation of these bottoms. But if we start to go back into these efficient levels, we're going to see some dollar opportunities. Just be ready for it. Just be ready for it. Okay, oil. Oil is now down to the same lows we saw in September of 2024, same lows we saw back in April of 2023. Pretty important spot for oil. Is it going to hold support? That is the, whatever $1 trillion question. If oil holds, okay, fine. If oil starts to decrease and go lower, I'm not calling the bottom on oil. I think oil can slide into 60. We can slide into 50. We can have this larger, channel can push down from a symmetry move. I mean, this would be ridiculously scary, but after watching oil go negative during COVID, it can do whatever it wants. So I'm very cautious on oil. I think it's a good opportunity to potentially take a stab on this, but it's like, what would be the fundamental reasons for oil to go up, right? U.S. wants deregulation. U.S. wants to drill like crazy. They want to start firing things up domestically again. They want to be one of the bigger producers and compete on the global stage again. OPEC's the only thing that stands in the way between, what the U.S. wants with oil prices. Saudi Arabia wants lower oil prices as well. They want to drive margins down so they can still take up more market share. OPEC is always the one that's fighting back. That's your, for lack of better words, that's your cartel. But I don't know why we'd bounce. The only thing that we bounce from is like, oh, there's a supply shortage. Okay. But if there's heavy amounts of producing and all of a sudden it's like a supply glut, I don't think oil stands a chance to staying bullish. So maybe not a bad trade would just be selling oil. If we break the floor, if we break and retest and fail, we've got room to fall. So it could be a pretty good position there. I don't know. I'll keep an eye on it. I like it. I just want to see, do we hold the lows or do we break the lows? If we break the lows, we could quickly drop into the 60s and 50s. And that could be a very profitable trade. That's probably a surprise trade for a lot of traders out there that are like thinking energy is this great diversifier when in fact energy prices and oil prices are dropping. And that's kind of the exact opposite of what they want to see. But we'll find out. All right, what else do we have here? Gold and silver. Natural gas making some fresh highs. My UNG position up about 22.90. This one is going to be getting close to called away. Not a huge winner. But TLT is pulling back a little bit. TLT is trading at 80. Oh my God. I had this thing up to 92. Looks like my covered call. I mean, I still have $8,000 on TLT. UNG is up around $3,500. I have a 5x23. It's not ready to get called away yet, but if we get up above $23, what's silly to me is like this $23 call is upside down. So my $5 call is up a bunch of profit, and my call, because price has gone up, it's like, I guess I'm losing on that call value because we've seen the call options increase in price. And so I only got like a 70 cents to $1 on the covered call. And it's obviously a much higher premium right now. So it's still potentially going to get called away. I don't mind the trade. I mean, it's $18 for what costs me, I think $11. Cost me $11 and I maxed it out around 18. That's still a good win on the trade. But I've got to get it. I'll just wait. I'll wait and see if it gets called away $18. I could also play around with the roll aspect too. Okay, gold. Gold is showing some resiliency, but I still want to wait for dips and pullbacks. I still think we're going to get them. With the amount of federal staff being slashed by, yeah, but it's not actually being slashed. Doge doesn't have the power to fire anybody. Doge has the power to recommend. So what the Fed government has done has been a hiring freeze, but they're not actually, forcefully laying off people. They're probably putting in mandates like return to office or don't have a job. They're probably making it pretty harsh out there. But Doge does not have the authority to fire anybody. So it's basically coming in as a, efficiency consultant. and whether or not these firings and terminations go through, or is there better ways? Like, I mean, if anybody watched Trump's Congress address this week, I mean, he just rattled off like Social Security. We've got people that are 100 to 110 years old, 110 to 120, 130, 140. Somehow in the Social Security system, there's people that are over 200 years old that are still getting Social Security benefits. How that happens, I have no clue. But it'd be that type of efficiency where I'd like to see it cleaned up as opposed to just firing people. You know, I mean, if you fire 200, 300, 400,000 jobs, and you think about what the government did create over the last 2, 3, 4 years, you know, 800,000 jobs, a million jobs, government has been, yes, I'm not saying government is the answer, but we did create jobs. And if all of a sudden you get rid of those jobs, well, you're displacing workers. That's going to show up in unemployment rates. That's going to show up in continued jobless claims, you know? So I don't think that coming in to fire people is the best answer for Doge. We'll see. But I don't know. Like I said, I think Trump and this administration could be, to bring about change, it might have to come with a lot of pain. You know, to see real sustainable change, it might have to come with a lot of pain and a crisis. That could be a recession. That could be an outlier event that nobody sees coming. That could be, you know, geopolitical tensions that boil over. I don't know. But I don't think we make a smooth transition at all. I think that there's a lot of abrasiveness when it comes to current administration policies and just the tone, you know. So we'll see. That's why you got to trade it. All right. Am I going to Atlanta? I'm not. Tomorrow I'm going to be in California. So I'll be up bright and early watching non-farm payroll around 5:30 a.m. Local time, and I'll see where the chips fall. I'll be in California tomorrow. All right, gold. I still want to wait for pullbacks. Like I said, previous highs hitting some moving averages. Silver looking better than gold. I'm actually pretty pleased with my silver positions. I've got SI futures, which is up here. So SI futures up around $900 right now, and SLV is currently up around $14,700. So I still like the positions. Credit spreads, own some shares. I'm not trying to let them go until anything around like $35 or $34. 35 are all my calls. I do have some put protection. I've got some 34 covered calls as well. I also put in some diagonal spreads. So SLV is share. SLV, I have shares. I have them covered. I have a 15 by 34 diagonal spread. This is all out to, this is, so right here, by the way, my 680 is a $15 long call out to January of 2026. And I sold a June 34 against that. So it's $19 max profit. And that trade cost me about $13.90. So $13.90. I'll do the math on this. So it cost me $13.90. I max out at $19 if everything goes well, and I'm in 300 shares. So it's a $1,500 position. If I called away this summer, I also have 600 shares if I get it called away, which I don't really want SLV to get called away. I think this has room to keep going up. This is another run that I'd like to be a part of. You know, I put this line here just in case we have some type of channel. So if we end up going, you know, through these highs and get to this channel high, we could get into the high 30s or even $40. So if I have it covered at 35 or 36, you know, I'd like to be able to roll this if possible and just let it run. But, you know, I've got a big enough position. I'll let it run. I'll let it do its thing. So that's SLV. Let's go back to the charts. We did gold, we did silver. Let's take a look at the two combined. If you look at gold versus silver right now from this range, and this has been it's been a pretty nice 2-year range where gold, silver has been having its moments where, you know, gold is outperforming, then silver's outperforming, gold's outperforming. If this is building something like this for a topping pattern, it'd be nice to see silver catch the kind of outperforming bid and see if SLV and SI and XAG can run a little bit hotter than gold. Call it poor man's gold or whatever, but I'd love to see silver on a technical front make a nice big move, if possible. All right, what else? Bitcoin trading around 90K. IBIT hanging in there at 51.65. MicroStrategy actually a green on the day, which is not too shabby. So let me see here on MSTR. So MSTR for overall positioning, well, I've got some year-to-date P&L, but I'm down on my open positions. A lot of that is just option prices. It's a highly sensitive option price. It's very volatile, obviously. I still have some shares. I have some call spreads. I've got some debit spreads. Let me see just individual accounts here. Here's a good look at it. So I have shares. I have the 310 call by 200 put. That's my collar trade. So I can go ahead and let me just label this. So that's my collar trade. The 375 by 390. That wasn't out of the money bull call spread that's out to January of next year. So if we're making fresh highs in Bitcoin, we're probably going to see MSTR up above, $400 again. And then I sold some puts. I did a 111 trade here out to March. This should be profitable. 100 by 95 by 65. That trade still needs some more time. But basically for the trade itself, let me put in a 111 here. That is those are all the same expirations. Yes. Yes. So that's a 111. All right. So let me group that together. So the 100 by 95 by 65, that is currently up. So it's $1.90 income. It's trading for $1.90 right now. I mean, honestly, it's in profit. I could probably just let it close, but this is only 15 days out. I might as well I can let it expire. If I want some buying power back, I can just close this thing out. That would wrap up, probably give me about $4,000 to $5,000 of buying power back, which isn't a huge deal. Do you think 4% unemployment is even possible when we see 240 to 220? I mean, I don't know. It's so hard to really believe the numbers when it comes to stuff like that. I mean, if we're getting legitimate layoffs and jobless claims, it's so hard to believe that 4% is, we're still maintaining some of the tightest labor market conditions that we've seen. I mean, we're still sitting near historical lows when it comes to unemployment. So, I mean, again, the data prints how it prints, whether you believe it or not. I don't know. I take it one step at a time. It's just one news announcement. It's a lot of noise. I don't think the market's going to fall apart on it, but I think if you start seeing, higher jobless claims, initial jobless claims, the one thing I want to find is residential construction jobs, total spending, job. So let me see if I can just find. This is one of the best signs for whether or not we go into a recession. Residential construction. I mean, right now we know the housing market in the U.S. is the most unaffordable it's ever been, right? Interest rates are way too high. The average household price or the average home price is way too high. The average household income is way too low. And right now, instead of using your typical rule of thumb is 20% gross income or 30% gross income, that's where you should cap yourself. Right now, the average home price compared to the average salary is requiring 47% of your gross income to make a mortgage payment. It's unsustainable. It's double what it should be. So if I find this residential construction job numbers, I don't. So here's building construction. I'm looking at. I want to see residential building job numbers. Here we go. Unemployment. So here's your residential building construction employment. And if I can dig a little bit deeper, it's I want to see where this thing is trending. Let me see where this is trending. All occupations. So I mean, honestly, I might just go and try to build this out in a spreadsheet and just see if this is trending. If this is trending lower, then it's not a good thing. If this is still pretty stable, then, probably resiliency in the economy, supply side catches up. We need to see if rates come down a little bit. I mean, all this stuff goes back and forth, So, but that's one really good measure that I'll keep a close eye on as far as are we heading into recession? Are things getting really ugly? I saw also there's an uptick in mortgage payments being late. I've got this. I think I took a screenshot of this yesterday. That's zero DTE stuff. Did I not take a picture of that? Thought I did. Guess not. Let me find it. Okay, here it is. I'll take a screenshot of this. So this is single family loan performance trends. Right now, we have about 15% of all FHA loans past due. Okay. Again, this is just one data point. One data point doesn't make a trend, but if this is trending higher, if serious delinquencies are trending higher, bankruptcies trending higher, like if foreclosures trending, if that's the case, these are all things that are behind the scenes that nobody's really talking about, but will cause some problems. You know, is this 2008 all over again? Not necessarily. There's too much household wealth right now, but if we have a massive crush in housing prices, it's gonna ruin people's hopes and dreams. You know, I mean, people right now think that they're wealthy because they have so much household wealth based on, well, I bought this house for X amount and it's worth double on paper. But if nobody's going to buy your house at that price, it's not worth that at all, right? A housing market is only dictated by what people are willing to spend. And if nobody's buying homes and houses are deemed unaffordable, then I don't know. And if obviously if you're in a home you can't afford to pay for, that's not good either. You know. So anyway, just stuff to consider. All right. So a couple more things here, and then I'm gonna roll. But Bitcoin's hanging in there, some resiliency. MicroStrategy is a nice little rally. Let's go copper. Copper has had a surge the last couple of days. This trade we put in for Pulver Alerts is looking pretty good. It's not in full profit yet, but it's getting up there where I'm not really worried about it. Here is my trade on copper. So my max profit's about 160 bucks. It's about 54% of profit right now. And I think we're so far out of the money. I mean, what would be my position I'd have to worry about? 4.18. So 4.18 on the options chain is trading down to a 7 delta. So there's about a 93% chance that this stays out of the money. There's no risk on the trade. Well, there's a 7% risk on the trade, roughly speaking. But I would say highly improbable that this trade doesn't come to full profit. So if my 160 per contract is trading for 145, 150, I'll probably just take the profit and move on. Okay, let me do a quick spot check on a trade for SPX this morning. Just sticky freaking pricing, huh? All right, it's going to give us some time to work. Japanese yen, we are breaching this recent high. I did close out my bull call spread. I'm looking for a repositioning here, but not yet. I don't know if the Japanese yen just starts to take off or if we have a pattern that's going to start pushing back. And I may be looking for another position on the future side. I still don't love that the futures contracts only go out to September. I'm not a huge fan of that. I'd like to go out further. I'd like to trade the Japanese yen like I'm doing an FXY, which is going way out in the future because I just own shares of it. So I'm still going to keep my shares of FXY, and I'll probably hang on to those shares until we get back to 65 or higher. My break even on this is around 58 bucks. So if we get up to 65, $66, then a couple things. One is if we maybe pull back into here, I might buy some more shares, or we pull back into the same lows again, I might buy some more shares and look at this as a chance to trade the low to the high and take from like 58 to 65 or 66, $8 a share doesn't get anybody excited, but if I put in, a couple $1,000s, it's going to pay. It's going to pay okay. Right. All right. Brazil energy prices probably pulling it lower. We'll go EWZ here in a moment. DAX fresh highs again. I mean, amazing. The only thing I'm trading on DAX related is FEZ. I just sold some puts around the 50 to 49, 48, 47 handle. I mean, it's just going to be some income right now. I'm not chasing this. I mean, this for an index is one of the best performing indexes in the world right now, and this momentum is red hot. And I'd like there to be a pause or pullback because we're stretched so far away from the 200 moving average. But my gosh, I mean, it's not like it's at an extreme bar count. We hit the 200 moving average many times, so it's not like it's overextended with time. It's mostly just prices overextended. But do not call the top on this thing. This has been a great index to trade. So I'm long FEZ, FTSD. That's the FTSE 100. This one's fine, but Europe is getting the bigger nod because they are unloading a lot more fiscal policy than the UK is. Argentina pulling back a little bit. I'm still not ready to buy in. I was going to look at like a $75 position here. China also making a nice little run here the last couple of days. EWZ showing some resiliency. I still like Brazil. MAGs. holding kind of nicely off this 200 moving average, that you can still see like a lot of hesitation. It's not necessarily bullish. It's not bearish. The market's already made a correction, high, low, lower, high, lower, low. I also think that, NVIDIA, if we show some bottoming NVIDIA, that probably brings the MAGS ETF up, and we can show that, okay, look, we had our flush. There's still a rotation. The quality of MAG 7 is still pretty high. I don't think this year can be a bull market without having MAG 7 show some resiliency. I don't think you can have 7 stocks that go into the toilet that are this large and this profitable and this important, and then see 493 stocks that are like, well, don't worry, MAG 7, we got you. No way. I think the MAG 7 has to show resiliency. And look, they're all pretty decent discounts, right? Apple, steady. I mean, but at the 200 moving average, we had some really good support. Amazon at the 200 moving average showing some good support. Google is just through it, but a good way to look at Google would be if we come back up above. So if we dip below and dip above, that could be a good low to get put in on Google and head back up to all-time highs. That would be the lift that the market probably needs, right? Where it's not just MAG 7, it's not as concentrated, but it would be nice to see that we're getting a little bit more love. Meta, I still think we need to see Meta come back down to the 200 moving average. This is one of the highest bar counts I have in most of the stocks right now. This is, I believe, over 500 bars. 520 plus bars. So I'm not buying Meta until we at least have a pullback to that 200 moving average. Microsoft, bouncing off these lows, which is nice. Some income trades here still working out really well. 314 expiration. This one's going to be good for another $1.20. Hopefully this is next Friday. And then another one good for $2.40. Another one hopefully good for $2.29. As long as we stay here above 380, there's no assignment risk for me. So 375, 370, 370. My break-even price would be 370. This one's going to be 365. This one's going to be 365 as well. So if it stays out of the way, these are some nice looking income trades considering we turned pretty hard at those lows, which I'm fine with that. Netflix, another one that has a high bar count. I'd like to scoop up some Netflix, at the 200 moving average. It's not that hard. This trade is expiring here for $2.56 in a couple weeks. This would be basically a price would have to drop to $645. If I took any ownership, I would consider owning some Netflix shares, but it'd be around $645. I really don't want to own shares at $645 though. For 100 shares, that's a big capital tie up for my portfolio margin accounts. So this is generating mostly income, $2.56 income per contract. NVIDIA, we're hanging out around 114. This will be pretty important to watch. I mean, you can see like every real point that the bears are scoring, the market is at least responding to it. So I wouldn't be terribly surprised to see, maybe another low here does get bought. Another low does get bought. Or better yet, I would say we get back above like 120 to 125. If we get back above 120 to 125, we're kind of back above the trend line, back above the 200 moving average, and then maybe NVIDIA shows a little bit more signs of recovery and resiliency. So again, this could be playing the mags. If they start picking up their slack and stopping the selling off like we've seen this year, it shows that Mag 7's kind of back in the good graces of the market. Maybe it's a little bit broader this time because people have exited their heavy positions and taken a lot of those profits. But I think Mag 7 is going to have to perform well and also have the rest of the market perform well. If we want to get back to all-time highs, we probably have to have that concerted effort on kind of everything. I don't think Mag 7 goes down and the rest of the market goes up. There's no way in my mind that Mag 7 goes down and the rest of the market goes up and you're going to see all-time highs. There's no way. So it's just because there's too much market cap. I mean, we were at $3.4 trillion on NVIDIA. Now we're 2.79. That is crazy to consider how much market cap this stock has lost within the last, 2 months. It's crazy. But that's the volatility that comes with it. So, SMH, it looks better. I've got a trade down here in SMH that was closed out for profit. I don't know. I might be playing with fire if I even do that trade. I was thinking of doing another SMH trade, which probably wouldn't be awful. Would I be willing to own SMH? Ugh. I mean, I kind of want to, but I kind of don't. If I'm going to own it, probably like the one. Let me look at it right now. I mean, I wouldn't mind like a 170, 160 area, but I don't know if the IB's that good. SMH. If I went out 50 days out on SMH, gets me a weekly expiration on the 25th. I don't even have the strike prices that I want. So let me try to go to another expiration. Let's go to May 16th. A little bit better. Okay, this is better. If I do a 195 by 190, I mean, this isn't awful, but I don't know. It's not that good of a trade in my opinion. 160 to 165. I mean, that's not a bad income trade. It's not a bad income trade. So essentially what I'm looking at is if price falls, I get a little dollar profit trap right here. I'd sell a put at 160 and I still get income on the trade. So 160 is all the way down here around this yearly moving average. If we have a high, low, lower, high, lower, low, I could see this. I mean, correction wise, that's probably in a 40 to 50% correction. That is a 42% correction. SMH is heavily weighted with NVIDIA, which is probably what maybe helps it stay more resilient than maybe something like SOXX. I also think the options on SOXX is a little bit worse. But this one is, I don't know which one has more like infrastructure. One is weighted on NVIDIA, but that's SMH. But I kind of like the idea of like more infrastructure, like the AI infrastructure, the AI build out, as opposed to it's just chips. So it's not a bad trade. I just think there's more liquidity in SMH. It's not a bad trade. This one closed out for profit. I think I'm going to take this trade. It's not that far out. I'm only going out about 71 days. If I wanted to take a bit more risk, I mean, I get $200 credit. I would have to take on some shares. Ownership price, I would own shares 160 plus 155. So I'd own shares at 157.50. I'd have a dollar profit trap, which would lower it by 50 cents. So I'd own the shares at 157. Right now we're trading at 224. 157 would be a 30% decline from here. And 157 would be about a 45% decline from the all-time highs. So income-wise, not a bad trade. If we have any seasonal move to the upside, it's not a bad trade. Probably don't need to have both. So that's $1 versus $2. I mean, obviously I'd like to take the credit there, but I don't want to be tied up for 200 shares. So 160 is fine. I'd own it around 159, 158 be my break even if I took on the shares. So let me go check on a 30-day covered call just to see if I did have any assignment, what a repair would look like. $9 to $10 on a 30-day covered call. That's a pretty easy repair. All right, I'm gonna take this trade. So May 16th, it is a 195 put that I'm buying and a 194 that I'm selling. That's going to create a $1 profit trap, and then a 160 cash secured put that I'd be willing to take shares of. Unlikely to get assigned, only about a maybe 5% chance of assignment, but a pretty easy repair if I get it. So hopefully I can get this trade in. It's pretty liquid. So let me see if I can get $1.05. $1.05. $1.05 not filling. You try the $1.04. Let's just penny this down until it fills. Hopefully I get more than $1 for the trade. Just a little income trade. $1.02. Come on. All right, just got filled at $1.01. So $1.01 fill. I'll put this on a couple of my accounts. $1.01. Son of a biscuit. All right, and $1. Okay, so that account, good. 9072. That one is a IRA account. I'm going to stay out of that one for right now. All right, so that trade's in. This is SMH. May 16 expiration. Buy the 195 put, sell the 194 put, sell the 160 collect $1 to $1 credit. If I'm willing to own, that would be assigned at 160 minus the dollar minus the dollar. So 158 or 157, 157.99 is my break even. So willing to own, break even 158. All right, so I'm going to add that into Pulver Alerts. That's going to be a new trade under stocks and options. Even though it's an ETF, I'm just going to trade it like stocks and options. So this is a new trade. SMH 516 expiration. Buy the 195 put, sell the 194 put, sell the 160 put. Willing to own shares of SMH if price is less than 160 by expiration. Break-even price is 158. Probability assignment is 5%. Probability of profit on this trade is around 97%. So I like it. Good mechanics, nice little income trade. Shouldn't be a big deal. So I will put this trade in here. 160 would be my assignment. Get rid of this one. And then I've got a profit trap around the 195. So 195 up here. All right, so I have a 516, oops. So there's my bear put spread. And there's my cash secured put. So if price is here, down, up, down, I still make money and I keep the dollar. If price is down below here, I keep the dollar and I keep the dollar. So there's a profit trap right there. Okay. All right, take a picture of that, put that in the post. And there's a little SMH action. Okay, that has been posted. All right, I'm gonna about wrap things up. 269 on Tesla, okay, fine. This one close for profit, 255 out to March. I've still got a couple weeks on this one. I'd love to see a little bit of love on Tesla, at least staying above 255. And then out to April. I think by April, May, we get a little bit of a relief rally coming, depending on how low things go. But we've come back and filled a lot. We backfilled a lot of this gap from this rip post-election. It's kind of sad actually that Tesla's been this volatile to have such a ridiculous run on the post-election move and then give it all back. That has been, I'm pretty sure for the mega Tesla bulls out there has been pretty frustrating. Like it's just trading. It's a volatile stock and everybody knows that. I think still it's arguably and give it time, it's probably going to be one of the most profitable margin companies that the S&P has. But right now it's just not that stock. So we played out to symmetry. We pulled it back to 200 moving average. We are now testing levels where if there's some dynamic support in here, let's find it. And I don't know if this market gets a relief rally, but I think this is probably going to coincide with the mags getting lifted a little bit. If mags go up, then we're probably seeing like a broader move to the upside. Tesla being one of them. All right. And that is going to about do it for today. Berkshire Hathaway, this one is for income here. Funds, the 10-year rate ripping higher. I don't love that. Mortgage rates down to 676. Hopefully there's an update where it's coming in a little bit lower. I'd like to see like a 6.5 or lower. Futures, claims. What's this one? Unemployment rate and core PCE. Okay. And we've got PCI or CPI, PPI news next week. Alibaba, Baidu, FXI, KWeb, just China's looking okay. JD had earnings. They had earnings. They got all the way up to $46. They're back to 43. I might actually, since earnings is out right now, let me take a quick peek at JD. I do have some shares in this, and I might look to do a quick roll and just extend my time. So I have my 500 shares. I've got it covered. Oops. I've got it covered at $40 out to March 21st. I'm going to try to roll this. This was a collar trade. I'm going to try to roll this maybe one more week and get some, see if I can get some premium for it. So if I do a quick roll, keep the strike the same, go out another week, grab another 20 cents. I mean, 20 cents at 500 shares, that's another $100. If I go out a little bit farther, let's go first part of April. I mean, that's not bad. I go out to the first week of April. That extends my timeline by about 14 days. I get 55 to 60 cents on this, maybe. This is the hard part I had a couple weeks ago as I was trying to roll this thing, and it was, showing 50 cents mid, and I was only getting like, actually the bid price was, I mean, I showed bid price at 35. So it's still worth it. I mean, if I increase my profit by, $250 or so, but with 500 shares, I've got this on 3 accounts. So another $750 of income. Probability of it staying above $40 is pretty high. I can keep repairing the stock as well. So let me see if I can do a quick roll here. I'm only going out 14 extra days, but that's a pretty good jump. Oops. What did I just do? Yeah, I mean, I get like 12 cents for 1 week, or if I go out 2 weeks, it gives me like 40 to 50 cents. Let me see if I can sneak in 50 cents here on the roll. I don't know, I'll play around with it a little bit. So 50 cents here. Freaking easy, man. All right, so I just rolled it out for another couple weeks for 50 cents. Okay, so this one, do a quick roll. Go out to April 4th for 50 cents. Filled. This one, 40. Do a quick roll. Out to April 4th. Can I get 51 cents? Let me try 55. I'll try to get greedy here for a second. Not filling. Okay, let's try 54. 54 cents, even more generous. All right, that's going to be a quick update on my tracker for JD. So all the way down here, rolled, covered call to 4/4 expiration for 50 cents credit. So my new break even is 35.92 minus 50 is 35.42. 35.42 minus 40 gets me 458, 68.70 in profit. All I have to do is let price stay above $40. So I'll keep massaging this one. I might just keep selling calls. If it gets me another couple $100 each week, or every 1 to 2 weeks, I'll just keep doing it until, I don't know, maybe I can add an extra couple $1,000 to the bottom line. Just stay resilient, JD. All right, I think that's going to do it for today. Costco still needs to find a bar count. This is another high bar count. This trade is done for profit. That was over and done with. I still have some 111s on Costco. Costco has earnings this week too. They have earnings today after market. So I'm pretty sure I have no exposure on Costco outside of prices that are way lower. Costco is down here. And yeah, 700 by 6. 700 by, let me see, just one account. Costco, 700. What is this trade? 655 by 600. Is that right? I'm so confused. I feel like this should be a minus. Hang on a second. Buy What the fudge? So 961 in total credit. I mean, it's not even time sensitive. It's out to 2026. But I don't know why on earth I would have bought a 700 put and then also bought a 660 put. That is weird. So I'll figure that trade out. Either way, though, I mean, the trades are way lower. Some of these are, I'm willing to own some Costco in the 600s. I just sold a bunch of premium on it, but I need to figure out what the heck that trade is. What this should have been is like if I bought the 700 and then sold the 690, give me a profit trap and then sell, something like that. But I'll figure that one out. All right. Anyway, one more spot check on SPX for the day, and then I'll let you go. Right now, break even on my SPX trade. Come on, man. Just give me some time. All right. I'm going to let you go for today. Happy Thursday. Enjoy the rest of the day. I'll be gone tomorrow. Non-farm payroll coming out at 8:30. Let's see what the numbers give us, and let's see where prices go. I still think that just keep a close eye on the intraday price action, because today the market is not really like it's able to go higher or lower. We've at least put in a bit of a short-term pain, like stopping point. So we have some indecision here the last 3 days of trading. Today's another, kind of inside candle day. Does non-farm make things worse? Does it make things better? We have inflation news next week. That's going to be an interesting conversation. Same thing here. I like buying it here. I like positioning my options for a chance to get long. The safest way to trade it is don't trade too early. That's probably the safest way to trade it. Until we get on the right-hand side of the trend line, don't force this trade. The only way I would test this area would be because I'm trading options. I can test small, take a small, 0.25%, 0.5% risk. And if it goes my way, then I can load up and get a little bit more aggressive on the percentages and see if this actually gets a, seasonal push into May, into April, into March, or into May, March, April, May. Yeah. If we get that, then let's try to make some bucks through summertime. Okay. All right. Enjoy the day. See you soon. Bye.
Thanks for watching today's A1 Trading Show. Be sure to subscribe and to turn on notifications so you don't miss the next one. Want more from A1 Trading? Check out the links in the description below, or our website a1trading.com. We have lots of free trading tools and channels available for you. We hope you have a great rest of your day, and we'll see you tomorrow.